Good morning, everyone. So, welcome you all to the 𝐓𝐴𝐵 platform for the second part, which is damn sure question. Remaining 7 units, whatever we have done the 3 units marathon in part number 1. Those who did not watch that session yesterday, please go to the channel and watch that session. And those are watching this part 2 now after watching the part 1. So we are going to cover the 7 units remaining from the unit number 4, business finance till the income tax. I am going to cover all the previous year question in one shot. And from yesterday's session, from today's session, definitely in the afternoon today, whatever exam is going to happen for the UGC Net Commerce, you are going to get minimum to minimum the similar concepts whatever we are doing now for sure. So kindly listen to it very carefully. I will try my best to avoid the repetition, and I will explain only to the point whatever is there in the PYQ, and will go on to the each and every unit in a similar way. Right, let's start with a unit which is business finance, which is a continuation of yesterday's session. Please be interactive in the chat box. How I am repeating, how I am explaining the topic or the point, kindly repeat in the chat box. So do not get nervous. I will cover by today. Yesterday I was not able to take it because I was not at home to take this session, which is why even though many people are asking and commenting about the session part 2, so my practical impossibilities are there, which is why I was not able to take it. Right. So here first important models and theories in a quick mapping. If you see, approach is a capital approach, is a capital structure approach, and dividend approach also there. So capital structure and dividend decision and capital structure both are irrelevance theories given by the Modi, Gilani and Miller. Static trade-off theory is optimal debt when tax benefit is equal to financial distress. So tax saving is equal to financial distress. Means by engaging more debt in the capital structure, we are going to have a financial distress. The more burden will be there on the company to pay regular interest to the debenture holder. That is called financial distress, which is equal to the tax saving which you are getting by engaging more debt in the capital structure. And Walter model dividend decision depending upon R and KE, where it is declining firms prefer to pay 100% because why are we paying 100% when the firm growth rate is very low? Because we wanted to attract the customer. We want to attract the customer, which is why we prefer 100% payout. Gordon model dividend affect the share price. Investor prefer current dividend and the uncertainty model. So when current dividends are under uncertainty, the Gordon model is preferring it is going to impact the share price when investor expecting the current dividend which is under uncertain conditions. And here Baumol cash model, when cash flows are certain to predict, we will prefer Baumol cash management model, and which is EOQ, same calculation. Miller ORR model, when cash flows are uncertain, we use the Miller ORR model. And Markowitz theory, which is related to portfolio selection. Markowitz theory is related to what? Portfolio selection, which is based on the expected return, risk and covariance. And CAPM is related to cost of capital calculation, that is cost of equity. Expected return depends upon the risk-free rate of return and beta and risk premium. That is risk-free rate of return plus beta into market risk minus risk-free rate of return. That is the CAPM formula. And Walter model formula, theoretical market price equal to dividend plus R by KE multiplied by E minus D, EPS minus DPS divided by KE. So here R by KE is the main thing, and Gordon model E into 1 minus B divided by KE minus BR, which is a growth rate. So here dividend relevance model is Walter and Gordon, and here in the Gordon KE, cost of equity more than the growth rate always. Remember this. And remaining all formulas are within your zone of coverage only. We'll do one by one, and if not covered, we'll do it that again. So time value of money, business finance is basically deals with the procurement of funds and allocation of the fund. How are we procuring the fund and how are we utilizing the funds are the two major perspective of the financial management. And for financing decisions are mainly financial management decisions are three types: investment decision, financing decision, dividend decision. So investment decision, long term decisions are capital budgeting, short term investment decisions are working capital, financing decision like the decision with respect to cost of capital, capital structure, leverages, all those are financing decision. Dividend decision is declaring a dividend and retained earnings related are comes under dividend decision. Capital structure refers to composition of long-term funds such as equity, preference and debentures. How much portion of equity debenture should be available. And there is a structure called financial structure. Financial structure beyond the capital structure, if we are discussing not only about the composition of owner capital and the debt capital, total structure of the organization will talk about financial structure. Cost of capital is nothing but it is a minimum rate of return that is required to earn to pay off the mandatory liabilities. Minimum rate of return that project must earn to maintain the market value of the firm, because that is the amount which is minimum expected by shareholder. And time value of money is based on the idea that money is available today is more valuable than what is going to be there in tomorrow. Right? Present value is much more valuable than tomorrow's value. Present value of discounts future cash flows today, and future values compounds current money of future date, because present value discounted to the today's date according to the time value of money, and future value compounds the current money to future date. So if 1 rupee today, how much it is going to be there in the after 5 years, after 10 years, or whatever is going to be there after 10 years, how much it is in today's value, that is called present value. When we are talking about future value, we are predicting the future with a compounding. So compounding means adding present value to future value. When we are coming back future value to present value, it is called discounting. So an annuity equity cash flows at a regular intervals for a fixed period. Annuity starts in the beginning of each period. Perpetuity is an infinite series of cash flows occurring at a regular time intervals. Perpetuity. And here perpetuity is nothing but business is going to continue for a longer time period. Next, money receivable today does not have less value than money receivable in future. It normally have more value because of earning capacity. It is going to have a more value. Next, cost of preference share capital equal to preference dividend divided by net proceeds into 100. And why are we doing this? Whether it is irredeemable or redeemable, it is irredeemable preference share capital. When it is irredeemable in nature, preference dividend by net proceeds into 100. And for redeemable preference shares, we know the formula that preference dividend plus redemption value minus net proceeds divided by n whole divided by redemption value plus net proceeds divided by 2. This is how, even for the cost of debt, in place of preference dividend, we use the interest minus tax. In place of here interest, 1 minus tax will use. Interest into 1 minus tax plus redemption value minus net proceeds divided by n. Same formula will apply for cost of debt also. Right? And after that, here cost of debt when it is irredeemable, just cost of debt into 1 minus taxation, that we are, because tax deductible capital is that debenture capital. And cost of equity may be computed through dividend price approach, dividend growth approach, earning price approach, earning growth approach, realized yield approach, CAPM approach. CAPM we know, risk-free rate of return plus beta into market risk premium. Sir, careful understanding is required in this formula. When the question is specifying the amount, the whatever percentage is given, market risk premium, which is indicating RF minus RM minus RF. Right? Market risk premium is nothing but RM minus RF. RM minus RF equal to market risk premium, which we are going to multiply beta, RF plus beta into RM minus RF. When they specify RM separately given, RF separately given, then you apply this formula. If they specify that market risk premium is given, then directly you should take the whole amount here, whole percentage here, right? Beta measures the systematic risk of a security in relation to the market movement. Beta measures the systematic risk of a security in relation to the market movement. And new issue of equity is costlier than the retained earnings. Basically, when you are going for a new issue of shares, that is going to be more cost as compared to the retained earnings that what we are getting in the internal capital. Next, cost of retained earnings is the opportunity cost that is forgone by the shareholder on the dividend that could have been received and invested somewhere else. So it is basically an opportunity cost. Cost of retained earnings is an opportunity cost, and the return forgone by the shareholder. If they have received as in the form of the dividend, then they would have invested somewhere. So which is why it is an opportunity cost. Weighted average cost of capital is a average specific cost of the different sources, which is cost of debt, cost of preference, and cost of equity, cost of retained earnings in relation to proportion of their investment. All put together is a weighted average cost of capital or overall cost of capital. Next, marginal cost of capital is cost of raising one additional rupee of a capital, and it is useful in capital budgeting decision. It is useful in capital budgeting decision. Optimum capital budget is determined by combining the marginal cost of capital with a opportunity cost. What happened, guys? I'm not getting like how the session is going on. Is there any problem in the session? Just only for the doubt I am asking. Otherwise, I will discontinue the session. You can move on to the exam. Looking like many people are not interested in the session. It came down to less 50% suddenly. Shall I discontinue? No, I feel as such. It is required to discontinue. Don't know suddenly why the 50% it is falling down. Came to 60 and finally 40, finally 30, finally to now 25, 22. What's going on? No. This will lose our interest also. Let's see for 10 more minutes. I will check and will take a decision. Chalo. Capital structure theories. Capital structure explain the relationship between the debt and equity mix and the cost of capital and value of the firm. Right? So net income approach, which is saying that use of debt increase the firm value and reduce the overall cost of capital to a cheaper debt. Net income approach says use of debt increase the firm value and reduce the overall capital due to a cheaper debt. And your net operating income is saying that it is irrelevant. It is a irrelevant capital structure. Basically, overall cost of capital is going to be remain constant. And traditional approach says that it is an optimum capital structure where overall cost of capital is going to be minimum to some extent. The more you use the debt, the more amount of debt that you are going to use it, and that will be a base where excessive use of debt also will increase the cost of capital beyond the capacity or beyond the certain limit. If you use, then it will increase the cost of capital. That is traditional approach, which is relevant. Ezra Solomon has been given, and net income approach is given by David Durant. Next, Modigliani Miller approach is an irrelevant approach, which uses the arbitrage process, basically arbitrage process in the capital structure theory, and he given two types of theory: with the tax, without tax. So with the tax, without tax, there is no impact on the value of the firm, which is irrelevant theory. And there are taxes in the economy, which he assumed 1963 theory, In this, he clearly mentioned that yes, capital structure is going to impact on the value of the firm, which is relevant. Without taxes, capital structure is irrelevant. With the taxes, capital structure is impacting on the value of the firm when it is a levered firm. Levered means where we use the debt capital. And static off theory, trade-off theory says that borrow up to certain point where tax benefit with a debt is coming, till that point you take the loans and you borrow it. But beyond that, do not do that. It will increase the financial distress. That is why tax savings equal to financial distress. There is no additional benefit that you are going to get it by engaging more debt in the capital structure. And financial distress cost includes bankruptcy cost, loss of customer, agency cost, indirect operating losses. All these are the costs which are financial distress cost. Right? Optimum capital structure balances the debt tax shield benefit against the cost of financial distress. Debt tax shield benefit against the cost of financial distress. A highly levered firm has more financial risk because fixed interest commitment increases the risk to equity shareholder. And highly levered firm is more financial risk because financial interest commitment increase the risk to equity shareholder. And your financing mix is working capital determined by matching, conservative and aggressive approaches. So what is conservative? Use more long-term resources. Aggressive is use more depending upon the short-term resources. That is what the approach is basically. And operating leverage, financial leverage and combined leverage. Operating leverage, contribution by EBIT and percentage change in EBIT divided by percentage change in EBT. Sorry, percentage change in sales. That is operating leverage. Financial leverage is EBIT divided by EBT, and percentage change in EBT divided by percentage change in EBIT. Right? So when we multiply both, we are going to get a combined leverage. So EBIT by EBT is a financial leverage, and contribution by EBIT is a operating leverage. So operating leverage is basically effect of change in sales on the EBIT due to fixed operating cost. Effect of changes in EBIT due to fixed financial charges, that is financial leverage. So when we combine both degree of operating leverage and financial leverage, it will be a combined leverage. So trading on equity means fixed cost debt are the preference capital which to increase the return on equity shareholder when ROI exceeds the cost of debt, when return on investment is more than the cost of debt. Trading on equity means fixed cost debentures. Debenture will have an interest which is a fixed cost. Preference will have a preference dividend. Both are fixed cost only. That using this both the capital to increase the return on equity holder. So both return on investment more than the cost of debt or cost of outsiders. Higher the leverage may increase the EPS in a favorable condition, and also it increases the risk, unfavorable condition. If the conditions are favorable, higher the risk will increase the return. If conditions are unfavorable, higher the risk will lead to trap, like it may incur the losses. Capital budgeting is a long-term investment decision which is evaluating the long-term investment proposal in a large capital expenditure benefits. Now, understand one point. Capital budgeting process is important. Capital budgeting process. First, project generation, preliminary screening of the all project, and detailed project evaluation. Later, project selection and implementation, control of the capital expenditure. The sequence of capital budgeting. And another sequence is that identify the potential investment opportunities which are there in the market, evaluate all those proposals which are there, Finally, select the best project which is suitable for you, decision making, and capital budgeting appropriation. Finally, implementing the project and performing the review, which is a feedback. So this is a sequence of procedure to be implemented in capital budgeting decision. And multinational capital budgeting sequence is that determine the net investment that is required and estimate the cash flows, identify the appropriate discount rate, then apply the evaluation technique, right? So these are basically a sequence of capital budgeting, multinational capital budgeting at an international level. Payback period is the amount in which we are trying to recover the initial investment. Whatever we invested, we are trying to recover. It is called payback period. The lesser the payback period, more will be the return. Lesser the payback period, better the option. And here, NPV, net present value, equal to present value of cash inflows minus outflows. Any surplus is called as a net present value, or deficit also net present value. Next, accept the project if NPV is positive, reject if NPV is negative. IRR is a discount rate at which present value of cash inflows equal to present value of cash outflow. The rate at which these both are equal, it is called IRR. IRR, if it is IRR is more than the cost of capital. And modified IRR assumes that positive cash flows are reinvested at a cost of capital, whereas traditional IRR assumes that it is reinvested at IRR itself. So always remember that any reinvestment, you are getting an inflow from the project, you are reinvesting that inflows on any project, which is going to be basically invested at a cost of capital only. We cannot invest an internal rate of return. So modified IRR and NPV assuming same thing. We are going to reinvest at a cost of capital rate. But regular IRR is assuming that it is reinvested at a same IRR rate, which is actually not practically possible. That is why conflict will come. So profitability index equal to present value of cash inflows divided by present value of cash outflow. More than one accept, more than or equal to one, less than one reject. Average annual rate after tax divided by average investment over the life of a project, which is ARR. And here, statement that value additive principle is not applicable in NPV is incorrect. I will tell you what is value additive principle. It is applied to NPV, net present value. Value additive means how much additionally present value of cash inflow minus outflow. This addition is there, now that is called value addition to your project. A group of independent projects equal to sum of their individuals NPV. Then we can say all put together how much value you are going to generate. It is called value additive, something extra beyond your investment. And dividend decision determines how much of earnings should be distributed as a dividend and how much should be retained with you. Right. Walter model links dividend policy is a relationship between internal rate of return and cost of equity. IRR and cost of equity is a Walter model. And Walter model, when growth rate is more than the cost of equity, should retain the earnings and pay the lower dividend. When firm is in a growth rate, retain the earnings and reinvest in the business only, do not declare the dividend, zero dividend. When the firm is in a declining stage, give more dividend to increase your market share and increase the trust of the shareholder, right? So in a declining firm, give 100% dividend. And Gordon capitalization model says that dividend policy affects the market price because investor is preferring the current dividends. They are not waiting for the reinvestment. They are always looking at the point of view of the opportunity cost. Gordon model assumptions that no corporate taxes, no external financing, constant retention ratio, constant cost of capital, perpetual earnings is going to be there. Gordon formula, E into 1 minus B divided by KE minus BR, growth rate, right? Gordon model, growth firm if R is more than KE, declining firm benefits the shareholder when R is less than KE. And is a irrelevant theory. Whether you declare the dividend or not, value of the firm will not be impacted by dividend declaration. That is what Modi, Gilani, Miller says. And here working capital, gross working capital means firms invest in current assets, right? Current asset minus current liability is a net working capital. Permanent working capital is a minimum amount of capital that should be maintained in the capital structure, maintained as a working capital throughout the period. Temporary means keep on fluctuating over and above the permanent working capital, how much it is there for a regular operations, that is called temporary working capital. Operating cycle of a manufacturing firm. Here, first raw material conversion period, then work in progress period, then finished goods period, then debtors, then after debtors minus creditors conversion period. So current asset minus current liability time period when it give you operating working capital cycle or operating cycle. Factors determining the working capital is that it can be impacted by nature of business, production cycle, business cycle, credit policy, operating efficiency, availability of credit, growth plans. And here, long-term source of finance, employee skill are not primary determinants of working capital. Why? Long-term working capital is a short-term, and employee skill is related to human resources. It is nothing to deal with the working capital. It is not directly. And here, matching approach means permanent current asset along with the long-term funds and temporary current asset along with the short-term funds. Like matching long-term with a long-term, short-term with a short-term. Conservative approach is nothing but where we are depending more on the long-term funds to invest in the current assets. Aggressive means we are depending more on the short-term funds to invest in the current assets. That is aggressive approach, very risky in nature. Conservative will reduce the risk, it will reduce the profitability also. Whereas aggressive is increases the risk, it may increase the profitability. Right, credit period allowed to customer increases, it increases the working capital. Credit period, the more credit time you allow, that working capital requirement will be increased. When you give less time, you will get you'll get amount early, then working capital requirement will come down. So the rotation has to happen. Kindly hit a like button if you like the session. Last and final two parts of the financial management are cash management. Baumal cash management, it is when the cash flows are certain to predict. Baumal EOQ model, 2 into annual cash requirement into opportunity cost divided by transaction cost. Transaction tax cost divided by opportunity cost. Baumal model assumes that cash can be forecasted with a certainty, certain model, and cash payments are occur uniformly. Opportunity cost is known, transaction cost is known. When it is unable to forecast the cash needs with a certainty, then it is Miller ORR model will be used. That is uncertainty model, stochastic model. So Miller ORR model, upper limit, lower limit return point will be there, and EOQ is same, total ordering cost and total carrying cost, where it is minimum, that is what economic order quantity. And EOQ increases with annual demand and ordering cost decreases with the carrying cost per unit. Next, inventory management is avoiding both overstocking and stock out situation. It has to control the inventory according to the requirement of the production, not full overstock, not understock. And factoring, receivable management is nothing but how are we converting the credit sales and how can we able to recover the benefits against the collection cost, bad debt, investment debtors. So right, receivable management is we made a credit sale by incurring a collection cost, bad debts and investment in debtors because to increase the sales. Factoring is an approach. Factor is the agent who will be going for our debtors to collect the amount for a certain commission, but before he is collecting, he will give advance amount to us, then later he will collect from the customer and remit the remaining balance after deducting certain commission which is agreed. Credit policy, credit collection period, debtor turnover ratio, all these are directly affecting the receivables. Public issue, book building, stock split, market instrument. Book building is a price recovery mechanism. Book building, we issue the shares in the public and based on the bidding process, the price will determine. It is called book building. And book building process is first merchant banker and syndicate members, appointment of merchant banker, then file red herring prospectus without any price. We issue the red herring prospectus with a SEBI, generate the awareness and run an order book, at what price the people are bidding, determine the issue price and clearing price, finally allotment at that price to all the shareholder who applied for the shares. Stock split is basically divides each share into larger number of shares and proportionately reduce the market price per share without changing the net worth. Market capital net worth is constant, number of shares will increase and per share value will come down, but total worth of the capital is same. And main objective of the stock split is to reduce the market price per share, encourage the wider public ownership. By splitting the number of shares, the ownership will increase proportion. Increase the number of shares result in a stock split, and here it aim was to reduction in the price and wider ownership. Bonus issue is capitalizing the reserves and giving additional shares to existing shareholder for free, and rights issue offer a new shares to existing shareholder in proportion to their existing holding but at a lesser price. Right. In NPS, asset class E equal to equity, asset class C is corporate debt, G is government securities and state development loans, and asset class A for state development loan, and E for equity, C for corporate debt, G for government securities under the SEBI. Portfolio manager under the SEBI requires application, eligibility scrutiny and fee and compliance with the portfolio manager regulations of SEBI. Next up, sale and lease back means first we sell the asset. Whenever we are in need of cash, we sell the asset and we immediately take the same asset on lease basis. So possession is with us only owner is getting changed. Ultimately cash needs are getting satisfied and you are also continue to use the asset. Sale and lease back help to unlock the capital tied with a fixed asset, and without interrupting the use of asset we are able to utilize or we are able to generate the cash. Factoring may be recourse or non-recourse depending upon who bears the loss. When it is recourse factoring is nothing but risk of bad debt is borne by the factor. Non-recourse means risk of bad debt is borne by the seller. Right. Undisclosed factoring means where we are not going to mention the factor name on the invoice. Right. Next here, revolving structure of securitization collects cash flows, use them to buy new asset instead of buying immediately, remitting the cash to investors. Revolving securitization means you are converting the illiquid pool of assets into liquid money, but the cyclical process is generally happening with a very speed, that is called revolving structure. And amortizing pass-through securitization structure which pays principal and interest to the investors. Principal plus interest both will be paid to the investors over a life of a product, that is called amortization or amortization process in securitization. Self-liquidating structure in securitization is nothing but it is repaid through cash generated by the asset financed by a loan. Cash generated by asset financed by a loan. Actually that asset you purchased with the help of a loan and that asset is generating a cash which is called self-liquidating structure. Next, private and venture capital invest privately held companies and they provide strategic and managerial support to the startup companies. Euro currency market deals in deposit and which are dominated in the country outside of its origin. Euro currency market in deposits and loans which are denominated in a currency not in euro, other than euro. And it is does not attract a CRR SLR restriction because it has no deposit insurance like a DICG insurance also will not be applicable to euro currency. And here diversification, diverting the funds from one to another, it reduces the unsystematic risk. But systematic risk cannot be eliminated by diversification. Systematic risk is impacting on all. Unsystematic risk is impacting only on your firm. So unsystematic can be avoided and controlled, but systematic cannot be avoided, cannot be controlled. Portfolio risk depending upon the individual securities, covariance and correlation among the securities. And Markovitch theory is a risk return trade-off and efficient market portfolios. Next, when the beta is greater than 1, more systematic risk. When beta is less than 1, lower the systematic risk than market. So more systematic risk means beta is more than 1. Right. So bond price and interest rate move inversely. When interest rate rises, When interest rate rises, bond prices will fall. When interest rate falls, bond price will go up. Like that, inverse relationship will be there. International diversification is nothing but investing across countries and regions to reduce domestic only portfolio exposure. International diversification means investing across the countries and regions to reduce the domestic only portfolio exposure. And problems related to optimal international diversification includes unfavorable exchange rate movement because it is happening at an international level, and international market frictions, demand and supply at international level, manipulation of security prices, unequal access to information. And it is suffering from political risk. International diversification suffering from political risk, economic instability, taxation, stamp duty, transaction cost, exchange control issues. And pooling combined funds are asset into a common pool for a risk reduction and scale benefit and operating efficiency. We are combining all the funds or asset together to reduce the risk and scale benefit. Next, financial hedge uses financial instruments too. Hedging is nothing but how to reduce the risk. Exchange rate is the price at which one currency is expressed in terms of the another currency, and forward market refers to buying and selling of the foreign currency today for the delivery at a later time period in the future date. Forward contract is basically to protect the value of foreign currency denominated transaction. To reduce the risk of price movement in the future, we enter the agreement now itself. Forward premium, which is forward rate is higher than the spot rate. Whatever current market price and forward rate. Forward rate always more than the current market price, because we are talking about the future execution of the contract, not the present one. Next, nostro account. We are having 3 accounts in the exchange, foreign exchange. Nostro account. Our bank account is with you. Our account with you means the Indian bank is maintaining a bank account with a foreign bank. And vostro, your account is with us. The foreign bank is maintaining a exchange or a currency account with the Indian bank. So your account with us. Your account with us. Right? Loro account. Vostro is foreign bank account is maintained with a local bank. Loro account means the bank does not have a direct account, so it is going to take a help of some third party bank who are having a foreign exchange account with another country bank. Rising cost of imports increase the demand for foreign currency that can put a pressure on domestic currency. When you are more importing the goods, it will increase the foreign currency. Our currency demand will come down and other country currency demand will go up. Right. Widening of trade deficit import. When import exceeds the export, our domestic currency rate is going to weak. Weak exchange rate will be. Opening of Vostro account and rupee settlement mechanism related to internationalization of rupee, and it was linked to price movement. Currency risk arises when the exchange rate movement affects the domestic value of foreign currency cash flows. Currency risk is nothing but day to day, whatever the changes which are happening in the exchange rate, it is called currency risk. Hedging, which reduces the currency hedge. Hedging is nothing but how to mitigate the risk. It also limit the gain from favorable exchange rate movement. Sometimes the hedging is also telling about gain, how to gain due to that exchange rate movement, and due to that exchange rate there is also risk involved. So with this, business finance is completed, right? Sir, now our target is that every 20 minutes 1 unit will go, 6 units. In next 2 hours I will knock down all the 6 units, if you can have a patience. When are you leaving to the examination center? Chalo, business statistics and research methods. Measures of central tendency. Arithmetic mean is affected by every observation because it is the sum of all the observation divided by number of observation. If each item is increases by a constant, the mean also increases by the same constant. Right? Median is a positional average. We are having arithmetic mean, geometric mean, harmonic mean are the mathematical averages. Positional averages are median, mode and partition values. Median is a positional average which is sum of the absolute deviation is minimum when the deviations are taken from the median. When the deviations are taken from the median. Next, mode is the most frequently repeated value. Mode is the most frequently repeated value. Harmonic mean is most appropriate for averaging rates and ratios when time factor is variable. When time factor is variable, it is a reciprocal of arithmetic mean, harmonic mean, and whenever we want to calculate the averaging of rate, we use this harmonic mean. On the way, okay, some people are on the way, some people will leave by 11:30. Fine, fine, fine. But if you do the revision by your end, you may not cover this many points, sir. Trust me, in the afternoon, it is going to give you good benefit. Even if I would have conducted these sessions before, you will not give this much attention. That is why we have to conduct at a peak time only. Then only you will listen. Otherwise, no. If I conduct, even we have conducted revision session back to back. Total, all these points are already been covered. Already everything, every point has been covered. But still, why I am taking again the repetition of the same thing? Paper 1, you people can do it in any way. Paper 2, it will fetch more marks in the examination. Geometric mean is suitable for average growth rate and your compound rate index number comparison. Under root of AB, square root of AB, it is basically comes under the geometric mean. And for a symmetrical distribution, mean, median, mode all are equal. In that, skewness is 0. All are equal means skewness is 0. Call Pearson coefficient of skewness, mean minus mode divided by standard deviation. 3 into mean minus median divided by standard deviation. When mode is not given, we use the mean minus median. When mode is given, mean minus mode divided by standard deviation. Right? And here, if mean 6.82, median is 6.80, standard deviation, then simply we have to apply. Mean and median is given, mode is not given. Second formula, 3 into mean minus median divided by standard deviation directly. Next, rightly skewed distribution. When rightly skewed means mean is more. When left skewed means mode is more. Median is in the middle only. Mean more means rightly skewed. Left skewed means mode is more. Mode is more. And yes, skewness measures the direction in which either left-tailed or right-tailed, whereas degree of asymmetry means inequality which are not equal, mean, median, mode are not equal, that is called as an lopsidedness. Lopsidedness of the distribution. Lopsidedness is nothing but when all are not equal. Kurtosis is the peakedness or a flatness of the distribution, not lopsidedness. It is peakedness, the curve, which is leptokurtic, mesokurtic, platykurtic, like this it will be there. Right? 3. Highest peakedness leptokurtic, lowest is platykurtic. Mesokurtic is normal distribution curve. So quartile deviation Q3 minus Q1 divided by 2 and symmetrical distribution median equal to Q1 plus Q3 by 2. And here coefficient of variation in paper 1 also this is getting repeated. Standard deviation divided by mean into 100. We have to calculate this coefficient of variation. It is a relative measure of consistency in the risk. A box plot is a 5-number summary. Minimum Q1 and median is Q3. In between Q2 will be there. That is called box plot. Interquartile range Q3 minus Q1 divided by 2 or Q3 minus Q1. Next, a trimmed mean is nothing but when you are eliminating the outliers, the end points. End points when you eliminate the middle one, it is called a trimmed mean. And complementary events are mutually exclusive and collectively exhaustive. Their probability, complementary event, probability of success plus probability of failure, both are equal to 1. 0.5, 0.5, 50 percentage means totally 1 only. Done. Okay, madam. 8-hour journey. That's how NTA is. If A is a complementary event, success plus failure equal to 1 or failure equal to 1 minus success. Bayes theorem updates. Bayes theorem is basically a prior probability using an evidence. So when Bayes theorem is normally with existing data, when we apply it is priori probability. Posterior means we get some revised evidence to revise the probability, then we apply that revised with evidence, then we'll get a posteriori probability. Likelihood into prior divided by evidence. Addition theorem for a two events, probability of A union B. Probability of A plus probability of B minus probability of A intersection. Probability of A union B equal to probability of A plus B minus probability of A intersection B together. And your independent events satisfy A intersection B equal to probability of A into probability of B. This is for independent events. Right? So when we are drawing a card out of the 52 deck of cards, remember to subtract overlap one. Spade or king, spade plus king minus king of spade. So the spade which can be a king, that overlapping we should remove it. Remember always this one. When they are asking you to calculate how many, what is the probability of occurrence of either king or spade only, king or spade, which is king plus spade minus king which are spades. That is overlapping now in that. In this 4 it will be there, in this 13 also it will be there. Right. So binomial distribution applies when trial is finite. Binomial, only two outcomes, success or the failure. Probability of success is remain constant. And binomial, mean equal to NP, variance equal to NPQ, standard deviation is under root NPQ. That is binomial. Binomial distribution, probability of success plus failure, P plus Q equal to 1. And binomial distribution is symmetric when P is 0.5. Symmetric means all are equal. Lack of symmetry means not equal, that is less than 5 or more than 5. Poisson distribution is used for a rare events to identify number of accidents per day, number of patients visiting per hour. Right. Poisson distribution, mean equal to variance, mean equal to variance. So here lambda is nothing but a mean, lambda is nothing but a variance in Poisson distribution, and standard deviation is nothing but square of lambda. Square of lambda. E calculation will be there, e power minus lambda into lambda power r divided by r factorial. Just we need to simplify, apply that figures and put it in the formula, you will get the answer. Poisson distribution may be treated as a limiting from binomial distribution when n is large and p is small. And your Poisson distribution, coefficient of skewness depending upon inverse of the lambda, that is 1 by lambda. This is what it is going to define coefficient of skewness. Coefficient of skewness is nothing but 1 by lambda. And standard Z-score. Z-score is how to calculate the Z-score, x minus mean, x minus population mean divided by standard deviation. That's how Z-score will be calculated. Z-score is the one where we have to go to the Z table and compare with this value. If this value is more than that Z-score, definitely the score will be accepted score for the conclusion. Next, correlation coefficient always lies between -1 to +1. Correlation coefficient is independent of origin and scale. Whether you do plus, minus, multiplication, division, correlation will not change. And if R is closer to +1 or -1, either it is strongly correlation or very weak correlation. And coefficient is a geometric mean of two regression coefficient. Two regression coefficient bxy into byx, both root equal to correlation. And correlation coefficient and regression coefficient have the same sign, same symbol, plus or minus, both should have a same. If one regression coefficient is more than 1, then other should be less than 1, definitely. And here regression coefficients of independent of origin. Regression will not be impacted by plus and minus, but it will be impacted by multiplication and division. In the examination also it will come. And here if x are divided by 5, r is remain changed, but regression will change with the scale, because division is a scale, not origin. Even if x values are multiplied by 5, r is going to remain unchanged, which correlation is not going to change. As it is a multiplication, regression will change. If x values are added, or else if x values are subtracted by 5, r will not change, correlation will not change, even regression also will not change, because regression is independent of origin but dependent on scale. And probable error is equal to 0.6745 or 2 by 3 into 1 minus r square divided by under root n. 1 minus r square divided by under root n, which is 0.6745. And coefficient of determination is r squared and explained variation. R is correlation, r square is coefficient of determination. And here 1 minus r square is nothing but coefficient of alienation. Alienation is nothing but non-determination. When you are discussing about explained variation r square, unexplained variation is 1 minus r square, which is nothing but alienation, coefficient of alienation. Right. Positive correlation means both are going to move in the same direction. Negative means opposite direction. Spearman rank correlation is a non-parametric test. And next one is a point estimate is a single value of probability parameter. Sample mean is a point estimate. Single value parameter is point estimate. Interval estimate gives a range with a population parameter which is expected to lie. And a consistent estimator becomes closer to the population. When the estimator is becoming same every time, it is very near to the population mean. As the sample size increases, the estimator will be very near to the population mean. An unbiased estimator has expected value equal to the population parameter. And sample design process, when you look at, first define the population, select the sample frame, select the sample technique, and determine the sample size. We are having simple, stratified, cluster, multi-stage, all are probability. Probability are DSP CQ, which is dimensional sampling, snowball sampling, purposive sampling, convenience sampling, quota. These are non-probability sampling. And S cube MCA, which is stratified, systematic, simple, multi-stage, cluster, area. All these are probability sampling methods. Right. Hypothesis testing. For hypothesis testing sequences of many types. First, select the null hypothesis and alternative. Then choose which test, parametric or non-parametric, and choose the significance level, which is a type 1 error alpha. And later compute the statistical values. Compare with the critical value as per the Z-score table. Then decide accordingly. First, state the null and alternative. Later, choose the test and significance level. Compute statistic. Compare critical value. Then decide. Type 1 error means rejecting true null hypothesis. It is denoted by alpha. Type 1 error is alpha. Right. Type 2 error means beta. So 1 minus beta is a power of test. 1 minus alpha is a significance level. 1 minus alpha is confidence interval. Smaller the p-value gives a stronger evidence against the null hypothesis. Smaller the p-value will be better the option. And if p-value is less than alpha, reject the null hypothesis. That means accepting the alternative hypothesis, which is a strong decision. For a paired sample, parametric test, generally paired t-test will be used. Z-test is used for the larger sample mean where more than 30 sample, and student t-test is critical value larger than the Z value for a small samples. And here chi-square test is used for goodness of fit test. Goodness of fit test to observe the association between the expected values and the observed frequencies. We use the chi-square test. ANOVA compass mean of more than 2 sample groups under parametric. And same ANOVA when it is comparing median of 2 sample group, then it is Mann-Whitney U-test will be used. U-test will be comparing 2 independent groups of non-parametric data. And here Kruskal-Wallis non-parametric alternative to comparing more than 2 groups. More than 2 groups is Kruskal-Wallis. Parametric test uses interval and ratio scale, whereas non-parametric is nominal and ordinal. Non-parametric is qualitative orientation, parametric is quantitative orientation. Next, multicollinearity means high correlation among the independent variable. And tolerance is 1 minus r square. 1 minus r square is nothing but, which is a tolerance. This is deducting the multicollinearity. And variation inflation factor will be there, 1 divided by 1 minus r square, which is 1 means no multicollinearity. And here Durbin-Watson static is commonly associated with a detection of autocorrelation in regression results. Durbin-Watson statistic is related to autocorrelation in regression results. And homoscedasticity means equal variance of errors across observation. Same error across all the observation is called homoscedasticity. Homo, same error. Skedasticity means error. R square may be lower in cross-sectional data, comparative higher in time series data. R square may be low in cross-sectional, high in time series data. Black-Scholes model, which is actually pricing model of the options. It is value stock option, underlying price, strike price, time, volatility, risk-free rate, option type will decide. Black-Scholes Merton model. And it is using log normal distribution for stock prices without any arbitration process. And research process, problem identification, developing a research approach, research design, and data collection, data analysis, report writing. Older sequence is that budgeting, fieldwork, data collection, resource outcome, and expert writing. And it is research approach selection, measurement technique selection, sample design, data collection, data analysis. So it is research approach selection, measurement technique, sample design, data collection, data analysis. Sir, research design or research process, anyway you have to do it. Based on the question, your answer should change. It is not definite steps, which comes first, which comes later. Accordingly, you should decide. Exploratory study is to complete when major dimensions are established. Right? Investigate the questions are framed, hypotheses are developed, and remove the remote possibilities are eliminated. Exploratory, digging deeper with a known data. And management question asks whether managers should do research questions converts into an information need. Research questions will be converting into information because research will provide you the inputs, but management is what manager can do. Investigative questions identify what researcher must learn, whereas measurement questions should learn what actually the respondents have reported. A leading question is basically pushes the respondent towards a particular answer. Leading is nothing but in the beginning itself you are influencing the respondent to give certain answer. Nominal scale is classifying the data. Ordinal scale keeping the data in order form. Interval scale is basically arranging data with equal distance intervals. And criterion validity statistically establishes ratio scale is a true zero value. Criteria validity establishes the relationship between the selection scores and job performance with the external decided criteria. We are always comparing with the standards, 35% marks in the exam for every paper. Content validity means test item failure represent the full content domain being measured. Content, we are only on the content. Construct means we are measuring the instrument, whether that instrument will measure it or not. RT-PCR test. RT-PCR test is going to measure the corona or not properly. And Cronbach alpha is a basic tool for measuring the internal consistency in quantitative research. Sir, in report writing, most important this one, definitely one question we can expect, and most debated question it is. Executive summary belongs to prefatory information. Prefatory pages are nothing but initial pages in the research report. So it includes the sequence: letter of transmittal, authorization statement, title page, table of content, executive summary. This is how. And there is another sequence: executive summary, introductory information, problem identification, and research design, supplementary information, and glossary. Like this, first letter of transmittal, generally title page will come before the transmittal, but they are saying transmittal, authorization statement, then title page. Letter of transmittal is used between the relationship between researcher and client. Title page is basically to explain about what we are doing and which topic we are discussing. Authorization letter, authority from the research supervisor or the company. And table of content is a list of figures or a research report is ultimate written report of research process. Executive summary means summary of all the findings and conclusions. And plagiarism is unethical because it is just presenting another person ideas or the words or the another person work as your own. Good research report should be accurate, objective, logically arranged, and reader oriented, supported by the evidence. Successfully completed within 20 minutes. Clear? Can I move to the next? Business management and human resource management. Business management and human resource management. F.W. Taylor is given the scientific management theory. He is a father of scientific management. Henry Fayol is a father of administrative management. Elton Mayo is a human relation theory. Max Weber bureaucracy theory. Maslow is a need hierarchy theory. Herbert is a two-factor theory. Alderfer is a ERG theory. And McElnard is a acquired needs theory, which is achievement, affiliation, and power. Next, Vroom's expectancy theory, expectancy, instrumentality, and balance. Eric Berne, transaction analysis, parent, adult ego, and child ego states. Thomas Harris is a life position. I am okay, you are okay, but you are okay, I am not okay. Like this. Truckman, group development, forming, storming, norming, performing, adjourning. Webb's, Sydney Webber, collective bargaining concept. These are the author's name, which is with a matching. Now, sir, uh, the sequences, design of thinking, how the thinking process should be. Empathize, define, ideate, prototype, and test. How our design thinking, when we are designing any product or anything, how our thought process should be. First, we empathize, we should understand how the design should be, and then define that, create an idea, then create a sample, after that test them. Next, group development, forming, storming, norming, performing, adjourning, the sequence of group development. Truckman. Motivational theory chronology, initially scientific management theory given by Taylor, later Elton Mayo human relation, later Maslow hierarchy, later Hertzberg, later Alderfer. Like this, old classical theory to modern theories. Market competitive pay plan, pay plan, benchmark jobs, defined degrees, comparative market rates, pay grades, and rate changes. How the payment is decided based on the competitors. Benchmark jobs are the factors first we need to decide, and define the degrees. After that, compare with the market rate, then decide the pay grade. HRP, human resource planning. First forecast the demand, later supply, later compare the gap, later action plan and control and review. Next, selection process. Apply for that job. Screening, test will be conducted, interview, and reference or medical check will be there. And sometimes even first interview will be conducted, later applications will be invited for the shortlisted candidates. Right, change resistance. Why people are not resisted, or resistance to change, not accepting the change. First, we have to educate them. We have to provide a communication, properly explain about the change what we are going to bring in the company. Then participation, ask them to participate in the change. Then facilitation, if anything is required, we will provide you the support and training. Negotiation with all the employees who are not accepting the change. Then selection, and finally we are going to implement with a force, that is coercion. Education or communication, participation, facilitation, negotiation, selection, and the coercion. And we are having a power types. Legitimate power comes from the formal position. Reward power, ability to give benefits to others. Coercive power, ability to punish the others. Expert power, the special knowledge or the skill. Referent power, admiring or else identification. Charismatic, which is a personal charm and inspirational influence. Information power, control over the valuable information. Right. Management is a process of planning, organizing, staffing, directing, and controlling the resources to achieve the organization goals. Planning, organizing, staffing, directing, controlling. And effectiveness means doing the right things efficiently with a minimum resources and minimum wastage. Planning is deciding what to do, how to do, and when to do, who will do it in advance. It's planning is something, thinking in advance, what to do, how to do, when to do, who will do it. Scientific management, F.W. Taylor, focus on work study, standardization, and efficiency. And human relation focus on Hawthorne studies, empathizing social and psychological factors at work. Henry Fayol is total given 14 principles, that is Russia code used. remuneration, unity of command, stability, and stability, which is substantiation of individual interest, authority, and here chain of command, order, discipline, equity, unity of direction, or else unity of command, and chain of actually one C is that decentralization, unity of command, unity of direction, and stability, esprit de corps, teamwork. Max Weber bureaucratic theory, hierarchy, rules, impersonality, formal authority, merit is important. System approach links with the open system interacting with environment. Contingency approach is saying that there is no best way. Managerial action depending upon the situation and the context. Right? And MBO, management by objective, linked with organization goals with individual performance. So total organization goals are going to be allotted in the form of small goals to each individual, which is called management by objective. Scalar chain. Exception to scalar chain is that it is scalar chain is one. We have to follow the hierarchy. But exception to that is a gangplank. In emergency situation, we can break that. Strategic decisions, long-term, non-routine, top-level operational decisions are routine and lower level. Programmed instructions handle the repetitive problem. Non-programmed decisions that handle the novel and unstructured problems. Programmed decision. Formalization means degree 2. Go with the rules, regulations. And departmentalization, grouping the similar activities under one department. Right? Types of decentralization or responsibility. It includes a cost center, profit center, an investment center, service center. Right? Delegation means assigning a duties and granting authority, creating accountability for results. Accountability for results. And your authority can be delegated, but responsibility cannot be delegated. You can delegate only the authority. What if you are not available, you can give it some additional tasks to them. Line organization is a clear authority. It is the oldest organization structure. Line and staff organization combine the line authority and the advisory expert that support, like economist, legal advisor, advocate. Matrix organization is a combination of functional plus project organization. Span of control means number of subordinates directly reporting to a manager. Right. Tall structure has many hierarchical level. Flat structure is only fewer levels. Wide span of control will be there. Next, boundary spanning is the organization with external stakeholders and environmental information. Basically, boundary spanning means you are interacting with others outside the company people. But how much extent you have to inform, that much only. That is boundary spanning. Power is a capacity to influence the behavior of others. Formal power is a legitimate reward and coercive, as well as information power. Informal is the expert, referent, charismatic power. Referent power coming from admiration and identification. Next, expert power is coming from the personal special knowledge or the skill. Legitimate power, already we have done such types of power in the above only. Right. Autocratic leadership theory centralizes the decision making. Democratic leadership involves a participation and laissez-faire leadership. And trait theory focus on leader qualities. Behavioral theory focus on leader actions. Contingency theory focus on a fit between the leader style and situation. Trait is quality. Behavioral is focus on leader actions. Contingency focus on fit between the behavior according to the situation, the style. Fielder contingency theory matches leader style with a situational favorableness. And path goal theory discussing about clarify the paths, remove the obstacles and motivate towards the goals. Next is that motivation, attitude, perception and learning personality. Motivation is a willingness to exert an effort. You need to put an effort to achieve the individual needs and organizational needs. Basically, organizational needs are utmost priority as compared to the individual needs. And here, scientific management theory, first, later in human relation, later Maslow, later 𝐓𝐡𝐚𝐧𝐤𝐬 later altered for ERG. Maslow need of hierarchy. First physiological, later safety, later social, later esteem, later self-actualization, the sequence of hierarchy. 𝐓𝐡𝐚𝐧𝐤𝐬 two-factor theory are hygiene factor, which reduce the dissatisfaction. Basically, two-factor theory are nothing but dissatisfaction factors, which are hygiene factor. Hygiene factor, when you reduce it, automatically it will reduce the, so when you improvise the hygiene factor, it will reduce the dissatisfaction. And another factor are motivator factor. Motivator factors you have to improvise to get more and more satisfaction. More and more satisfaction. Motivator that increases satisfaction, hygiene factor that reduces the dissatisfaction. Next, improvising hygiene factor decreases the dissatisfaction, but it does not automatically create a job satisfaction. That is the point. Decreasing dissatisfaction due to hygiene factor doesn't equal to increasing satisfaction. Decreasing dissatisfaction is different and increasing satisfaction is different. 𝐓𝐡𝐚𝐧𝐤𝐬 includes common policies, supervision, salary and working condition, interpersonal relationship. And 𝐓𝐡𝐚𝐧𝐤𝐬 order for 𝐅𝐨𝐫 theory, existence, relatedness, growth. Same this physiological safety are under the existence. Social and esteem are comes under the relatedness. Self-actualization is nothing but a growth. McKellar need theory, achievement, affiliation and power. Vroom's expectancy theory is expectancy, instrumentality and balance. Effort leads to performance, performance leads to reward. Effort is nothing but expectancy, instrumentality is nothing but a performance, balance is nothing but a reward. Next, perception is a process by which people select, organize and interpret the information in a meaningful picture of the world. So learning means changing the individual behavior arising from the experience. Belief is a descriptive thought that person is holding, what I believe about something. And attitude is constantly favorable or unfavorable situation, a feeling or tendency, a certain behavior towards the idea or the object, it is called attitude. Personality refers to relatively stable pattern of behavior, a stable pattern of thoughts, stable pattern of emotions. For an individual, it is called personality. Truckman has given 5 stages of development. First, forming the group, unknown to each other, storming, norming, performing, adjoining. Right? Forming is a orientation and uncertainty. Storming involves a conflict. Norming involves, creates a group work. Performing is so much tight group work. Then finally, achievement is adjoining. Transaction analysis by the Eric Berne, which is having life position. I am okay, you are okay. I am okay, you are not okay. I am not okay, you are okay. I am not okay, you are okay. You are also not okay. This is healthy and constructive life position is I am okay, you are okay. Conflict may be functional, but when it improves the decision and creativity. And it is a dysfunctional when it harms the performance. Manageable actions. Reduce the resistance to change. How are we going to reduce the resistance? Resistance means people are not ready to accept. So manageable actions to reduce the resistance to change includes, we have to educate them, we have to communicate about the change, we have to include them in the participation of the change, facilitate, provide the training for understanding the change, negotiate with them. If they are still not listening, then implement with a friendly way or else forcible way. Employees counseling support can reduce the resistance. We have to counsel them so that they will not say no for change. And here, organization culture represents shared values, beliefs and norms that guiding behavior. And organization climate is perception of internal work environment. The development use plan intervention to improve the organizational effectiveness. Organization development is basically a planned activity for improvising the effectiveness of organization and human well-being. Next, last and final, HR and training and development. Guys, do hit a like button if you like this session. Kindly share with your known groups. Human resource planning ensure that right number, right kind of people at a right place and time. Human resource planning, right number of people, right kind of people at a right time and right place. HRP compares manpower demand and supply and plan recruitment, training, development and downsizing. It plans recruitment, training, development and downsizing. Job analysis produces job description and specification. Description is about duties and responsibilities and working condition to perform. And specification is about human qualification to do the job. The qualification, skills, education and experience required for a job. Job context includes physical working condition, work schedule and incentives and the people with whom employee normally interacts. Job context. Context is physical working condition, work schedule, incentives and with whom the employee is normally going to work. Job enrichment. Enrichment means increase the depth of the job by adding responsibility. By adding responsibility, autonomy and meaningful work. Enrichment means you are getting a promotion, you are going to the next level. That is adding a responsibility only. Next, enlargement means adding the additional tasks to be performed. Adding the additional tasks to be performed. Enlargement, number of tasks at the same level of responsibility. Next, recruitment is a positive process of attracting candidates, whereas selection is a negative process. Recruitment is inviting application. Selection means removing the candidates and selecting only final candidates. Internal recruitment sources are promotion, transfer, employee referrals. External sources are campus recruitment, agencies, advertisement. Internal, external sources. Next, the selection process includes first application, screening, and then test, interview, reference check, medical examination. Like this, it will be there. Sometimes screening will come first, application will come later. Sometimes test will come first, later application will be taken, shortlisted candidates. Competency is measurable performance capability, skills, knowledge, behavior and problem solving. Competency means how you are competent as compared to others. Measure the capability, skills, knowledge, behavior and problem solving support. Training improves the current job performance. So training is to do the current job, but development is about, that is your career development. It is not only to be used in this job, it is also for the future. That is development. On the job training is coaching, job rotations, apprenticeship, understudy assignments. Off the job is lectures, case study, role play, simulation, vestibular training and sensitivity training. Hiring related turnover cost includes training cost when employee quits after receiving organizational training. Hiring related turnover includes training cost when employee quits after receiving organizational training. Hiring related turnover cost. It includes training cost when an employee quits after receiving organizational training. Next, career planning is individual career goals with organizational opportunities. Next, performance appraisal. It is to evaluate the employee worth. Evaluating the performance of employee related to job, it is called identifying the worth of the employee, it is called job performance appraisal. When that evaluation is nothing but determining the relative worth of the job. Performance appraisal is determining the relative worth of the job holder. Graphic rating scale disadvantage includes unclear standards, halo effect, leniency or strictness errors. Graphic scale rating, there is a one technique in the performance appraisal. Central tendency error means rating everyone near to the average. You are giving near to the average, everything you are coming on an average only. Halo effect means one strong trait influences overall rating. Horn effect means one negative trait influences the overall rating. And bars, behaviorally anchored rating scale, which reduces the ambiguity. And 360-degree appraisal, collect the feedback from supervisor, peer, subordinate and customer self. And incentive payments can improve the productivity, equipment utilization. Incentive payment is nothing but how are we utilizing your equipments or the machineries properly to improvise the productivity, and which can reduce the absenteeism. Market competitive pay plan means according to the competition, according to the market requirements, as per the industry standard, whatever the payment is there, the same thing they are paying to you. That is called market competitive pay. And here market competitive pay sequence is choose the benchmark jobs outside the market, similar jobs. Identify the factors related to each job. Define those factors and degree of each factor impact on the job. Then compare with the market rates. Finally, develop a pay grade. Accordingly, the rate will be decided for each job. Collective bargaining is a negotiation between the workers, union representative and employer and management representative regarding the employment terms. So it is identified by the Sydney Webb and Batteries in 1897. Main objective is to resolve the conflict and improvise the mutual agreement. protecting the worker interest, maintaining industrial peace. So good bargainers should not be hurry. Good bargainers should keep flexibility, respect the face saving, build a reputation for fair but firm. Fair but firm. Fair but firm. Being fair but not firm is not a good bargaining practice. Be fair and be firm. Fair but firm, which means that is a good practice. Fair but not firm means which is not a good practice of bargaining. Industrial relations refers to relationship among the employees, unions and state. Unitary approach assume that common interest and promotion of harmony. Everyone benefits when focus is common interest. Unitary approach, collective approach. Pluralistic means conflict. I have my opinion, you have your opinion, but we both are in same group. And your Marxist approach is industrial conflict is rooted as a conflict and a capital structure. Grievance is employee dissatisfaction, that making a small complaint. Grievance is nothing but. Discipline aims to ensure orderly behavior, rules compliance and correction rather than mere punishment. Discipline is more about following a clear-cut order behavior, and rules and regulations need to follow. It is not about only a punishment. Quality of work, life focus on safe, satisfying and participative work environment. The quality of work is determining. Next, utilitarian ethical, evaluate the ethical decision by net benefit or the greatest good for greatest number of people. Ethics of duty or deontology emphasize on moral duty principles rather than consequences. Theory of justice emphasizes on fairness, equity and fair distribution. Stakeholder considers interest of all the affected stakeholders. Entrepreneurship involves innovation, risk bearing, resource utilization, opportunity exploitation, and innovation is a commercial application of new ideas, process, products and business models. Next, design thinking is innovation. Anyway, it will start with a empathy. Design thinking always start with empathy, ends with a prototype and testing. That is what in the sequence we have seen now. First, start with the empathy. Start with the empathy. Empathize, define, ideate, prototype and test. 5 sequential process of design thinking. Productivity improves when employees are trained, motivated, incentivized. When they are getting motivated, automatically they will increase the production. And telecommunicating improve the productivity when it is supported by clear goal, communication and accountability, process of communicating with each other. TQM, total quality management focus on continuous improvement, customer satisfaction, involvement of all employees. Kaizen costing means continuous small improvements. Benchmarking compares practice and performance with best in class organization. Means benchmarking is basically keeping a standards, high quality of the production. Balanced scorecard views performance through financial, customer, internal process and learning with a growth perspectives. Done. We should start the banking and financial institutions. Only 3 units left over. 4 units, sorry. 1 hour 23 minutes. Again, we took 20 minutes to complete. 22 minutes we have taken to complete. Shall I give 2 minutes break? More 1.5 hours, sir. More 1.5 hour we can conclude all the sessions. Okay, let's start without late. Now, banking and financial institution, which is a unit number 7, sir. It will be easy. Some more of memory in the banking. 1969 Gadgil Committee related to priority sector lending. 1975 Prakash Tandon Committee related to banking credit as well as working capital norms. And 1975 most important M. Narasimhan Committee for the establishment of regional rural banks. And Lakshmi Narayan Committee, Consortium Lending. Talwar Committee for Customer Service in Bank. Chore Committee Review of Cash Credit. 1981 B. Sivaraman Committee setting up of the NABARD, National Bank for Agriculture and Rural Development. Rangarajan 86, which is for bank mechanization and computerization. Magnetic ink character recognition was introduced on the recommendation of Y.B. Damle. And money market reforms, Waghal Committee, most important, 87. Money market reforms are the commercial papers. Next, NBFC regulatory framework, Shah, 1991 and 1998, Narasimhan Committee 1 and 2, financial sector reform. First generation reform, second generation reforms. Shah is NBFC and Malhotra Committee is related to insurance sector. Insurance sector. Exim Bank, financing exports and import. Exim Bank, major activity exporting and import. NHB, housing finance. IDBI, financing and promoting of industries. NABARD, agriculture and rural. SEBI, security market and mutual funds. RBI, central bank and monetary policy. DICGC, it is a insurance credit guarantee agency. And SIDBI, which is support to small and medium enterprises. Let's go one by one now. So yes, sir. Financial system has 4 main components: financial institution, financial market, financial instruments, and financial services. Chit fund companies are treated as outside the formal organized structure of the financial system. Financial institutions mobilize the savings and channel them into productive investment activities. Capital markets are long term as well as short term, both will be there, but generally capital markets are long term. It supports the capital formation. Capital consists primary market and secondary market. Commercial paper accept the deposit, create a credit, provide a loan, overdraft, cash credit, bill discounting, and money at a call facilities. Commercial bank also provide the agency services such as trustee, collecting instrument, making payment to the customer. Depository institutions are financial institution legally owned to accept the deposit from the customer but not issuing a credit cards and all. Non-depository institutions satisfy the investment and risk needs without accepting the bank type deposits. It includes insurance companies, pension funds. They are talking about non-depository. They are not accepting any deposit from the public. NBFCs provide the loans and advances, hire purchase, but they are not the bank. They are not going to accept the demand deposits. Payment banks are RBI conceptualized, like Airtel Payment Bank, Paytm Payment Bank, but they can accept the restricted deposit maximum 2 lakh. It cannot issue the credit card or it cannot give the loans. Offshore banking units, foreign currency transaction outside the home country, and normally it will be serving to non-resident, which are outside our country. And chain banking means control over the 3 or more independently chartered bank by same individual or entity. 3 or more banks under the same entity, it is called chain banking. It is different from the branch banking. And group banking because the banks remain separately owned and chartered. One same individual or entity having 2 or more independent banks. Owner will be only one. Right? International banks are distinguished by export and import finance, foreign exchange services, because international banks are going to give the finance to import and export, foreign exchange services, hedging support, euro currency operations, etc. Next, RBI uses monetary policy to influence the money supply, credit availability, and interest rate. Quantitative are general credit control instruments which affect the total volume of the credit in the economy. Total quantity in the economy is affected by this only. CRR, SLR, repo rate, reverse repo rate, MSF, all this. Qualitative will be regulating the direction and purpose of the credit rather than quantity of the credit. Margin requirement, consumer credit regulation, rationing of credit, moral observation, direct actions, all these are qualitative measures. CRR is the share of deposits must keep with RBI. SLR is the share of net demand and time liabilities must maintain liquid assets such as gold, cash and approved securities. CRR is a share of deposits that keep with RBI. SLR is a share of net demand and time liabilities they have to maintain in the form of the cash, gold and approved securities. Repo rate at which commercial bank borrow from the RBI for a short-term needs. Reverse repo is RBI is borrowing from the commercial bank. Bank rate is the rate at which RBI is giving to commercial bank without any collateral. And here MCLR, which is interbank benchmark lending rate. Interbank, one bank internal benchmark lending rate by the banks for pricing the loans. To decide the loan prices, whatever the price is, the rate is called MCLR. RBI sell the securities under open market operation or market stabilization scheme to absorb the liquidity in the market. When RBI purchases the securities, liquidity is injected and cash reserves of commercial bank increase. MSS is introduced in April 2004, absorb the excess liquidity by selling government securities. Absorb the excess liquidity by selling government securities. The money raised under MSS is kept separate account with RBI and it is not available for government expenditure. Next one is central bank intervention in foreign exchange, because RBI is the one ultimately who is administering the Foreign Exchange Management Act also. Treasury bills, money market instrument is a short term, which are up to maximum 1 year. Treasury bills are short term government securities, which are by the RBI issued on behalf of the government, and it will be highly liquid, low risk, low return. These are issued at a discount, redeemed at a face value, and T-bills are issued at par, repaid at a premium. Repaid at a premium. And the correct idea is that issue at a discount and repayment at a par. Ordinary bills are marketable and have a secondary market. Ordinary treasury bills are issued to the public and financial institution through actions. And ad hoc bills, ad hoc treasury bills also there. They are issued only in favor of RBI, which are not marketable. Ordinary bills can be marketable. Commercial paper India was mooted by the Vogel committee in the 1919 Indian money market, and commercial paper is unsecured money market by the companies for short-term funds only, and certificate of deposit also negotiable money market instrument issued by the banks. Next, shortage of funds, absence of organized bill market is one of the traditional weakness of Indian money market. Organized bill market is not there, like commercial bill, all this. The shortage of funds, inadequate banking facilities, black money, over dependence, all these are weaken the money market. And here RTGS stands for real-time gross settlement. Real-time gross settlement, which is one of the digital payment system. It transfer fund from one bank to another bank in real time on gross basis. So minimum limit is that there is no maximum limit. Minimum 2 lakh for the RTGS. Minimum 2 lakh for the RTGS transactions. Maximum unlimited. NEFT is generally electronic fund transfer. Minimum 1 rupee. It will be transferred. And while RTGS is real time. IMPS, immediate payment system, which is instant interbank electronic fund transfer via mobile or internet channels, and its objective is to access the bank accounts and remit the funds. It is to build a base for mobile banking services basically. And SWIFT is Society for Worldwide Interchange Financial Telecommunication. It is a global messaging system for making a cross-border payment when you are making a payment between the countries, right? And IFSC for within the country. SWIFT code is for between the countries. SWIFT code is 8 or 11 character. UPI, IMPS, NEFT, RTGS, wallets, all these are digital payment modes in India. And it will be, we are having a challenges of digital payments are interoperability, standardization, cyber risk, customer verification and fraud management. AI can support the digital banking, customer verification, fraud detection, risk management, credit scoring and regulatory compliance. Customer verification, fraud detection, risk management, credit scoring, regulatory compliance. It usually operates through mobile apps, web platforms, often partner with the licensed banks basically. So large cash transaction means PAN is required, because more than 50,000 you cannot draw without the PAN number. And counterfeit notes, if any tampered notes are there at a bank, you can surrender to the bank and it must be stamped, which is acknowledgement. Next, financial inclusion. Inclusion means ensuring access to appropriate financial products, services at an affordable cost in a fair and transparent manner. It focuses more on every vulnerable group has to take up the services of the banks. That is why Pradhan Mantri Jan Dhan Yojana in 2014 has been launched to give, as part of the financial inclusion, everybody should access to financial services and financial products. For that purpose, it has been introduced. RBI Financial Inclusion Index has a three broad parameter: access, equity, usage. Access, usage, quality. Right? 35% is access, usage is 45, quality carrying 20% weight. Right? Financial literacy, consumer protection, inequality, deficiency, all are there in this quality parameter. In quality parameter, financial literacy, consumer protection, inequality, deficiency in services. Narasimhan Committee in 1975 recommended that establishment of RRB, Regional Rural Bank. Accordingly, RRB Act to 1976 has been enacted by the Government of India. It is to combine the local plus commercial bank together structure is that RRB. And RRB to establish one regional rural bank. Here, central government 50% ratio and state government 15% ratio. Sponsor bank is 35% ratio of investment must be there. 50, 15, 35 sponsor bank. NABARD is National Bank for Agriculture and Rural Development. Advances the credit and support the agriculture and rural economies development only. It was recommended through CRAFI Code, which is a Sivaraman Committee for a rural credit and agriculture development. RIDF related contribution of interest rate, deposit tenure, related conditions fixed by the RBI. Right, priority lending was associated with the Gadgil Committee, priority lending, and RBI notified domestic credit rating agencies use the risk weighting banks under the Basel capital regulations. Right. Here committee, most important committee, Narasimhan 1, 1991, financial sector reforms are first generation reforms. Rashid Jilani in 2020, Rashid Jilani is another commission. Saraf comes under the Rashid Jilani, and Padma Bhushan. Actually, it has been arranged in a PYQ order, but it is fine anyway. Narasimhan Committee associated with the financial sector reform, and it recommended 4-tier banking structure: SLR reduction, 8% capital adequacy, interest rate deregulation, and it is also recommended proper asset classification, disclosure, asset reconstruction fund separately to be. Narasimhan Committee 2, which is second generation reforms linked with a stronger banks, narrow banking. Strong banks are required, narrow banking is required, lower non-performing asset reconstruction companies has to develop. Same again, 8% capital adequacy norms. Narrow banking means bank invests mainly in a short-term risk-free assets to protect themselves. Short-term, rather than going for a long-term investment and losing the money, invest in a short-term. Vogel Committee is linked with a money market reforms and recommendation. Shah Committee with a NBFC. Malhotra Committee is the insurance sector reforms. Most important is Malhotra. Tandon Committee is bank credit and working capital norms. Next, Basel 1, 1988. Mainly credit risk, minimum 8% risk weighted asset, adopted by India in 1999. Basel 2, 2004 framework, 3 pillars: capital adequacy, supervisory review, market discipline. And Basel 3, 2010 and onwards, strong capital liquidity framework includes the national stable funding ratio. So Basel 1 are framed by Basel Committee on Banking Supervision in the year 1988, focused on credit risk, and capital adequacy ratio initially was 8% of risk weighted asset. It was adopted by India in 1999. And Basel 2 introduced a 3 pillar, which is minimum capital requirement, supervisory review, and market discipline are the 3 pillars. And also it is covering stronger liquidity and funding for global financial crisis stress. NSFR, net stable funding ratio, it includes Basel 3 framework. Net stable funding ratio requires to hold funding sufficient of the duration of a long term, sufficient for the duration of the long term asset. You have to fund for the long term. And Basel 3, Tier 1 and Tier 2 capitals are together generally tested against the risk-weighted asset and capital buffers. Tier 2 capital includes subordinated debt, revaluation reserves, hybrid instruments. All these are Tier 2. And credit risk is the possibility of loss due to bank failure to repay the money or to meet the contractual obligation. 5 C's to judge the credit. 5 C's to judge the credit are character or credit history, capacity, capital, conditions, and collateral. These 5 C's to check your or to judge the credit risk. And commercial credit is usually leads to higher interest rate for borrowers with a higher risk. And asset liability management manage the risk arising from mismatch between the bank and bank asset and liabilities. Next, NPA includes subordinated debts, substandard debts, doubtful debts, loss asset. NPA, non-performing asset, is a substandard debts. So subordinate, which are non-performing assets. Under that, subordinated, doubtful, loss assets are there. Credit rating agencies are Acute, CARE, CRISIL, ICRA. All these are credit rating agencies. Your SEBI complaint classification, how they can classify their complaints. SEBI type 1, non-receipt of securities or refund or allotment related share security matters. Type 1 complaint. Type 2 complaint, non-receipt of dividend, interest, redemption of the proceeds and payment dues. Type 3, intermediary conduct and procedure and non-adherence to regulatory guidelines. Type 4, fraud and unfair. Type 4 is fraud and unfair practices. SEBI regulates the mutual funds and capital market in India, and historically mutual fund entry load. Mutual fund is entry load, means the charge collected when the scheme sell to investor. When the scheme was sold to investor, whatever the charge that they charge is called exit load. So entry load. Exit load is nothing but whenever they are redeeming the mutual funds. When they are purchasing a mutual fund, entry load. When they are removing a mutual fund or taking back their investment, which is exit load. SEBI skin in the game is applicable to mutual fund. Unless you invest in the fund, you don't know the pain. So skin in the game is that only. And it is a key AMC employees must prescribe the portion of compensation in schemes they manage or oversee. And yes, type 1, type 2, type 3, type 4 done. SEBI sequence or regulation, buyback of securities, intermediaries, or this ICDR and RET, REIT, LODR. This is a sequence of SEBI regulation. Sequence of SEBI regulation. KYC, know your customer registration agency regulations of a SEBI, regulated area connected investor identity and compliance system. And also this listing of obligations, listing of disclosure obligations, related requirements are listed securities. Capital markets are only long term. Primary markets are issue of shares. Secondary markets are trading of existing companies. And Insurance Act 1938. Insurance Act in 1938, right? Regulation of insurance sector. LIC Act 1956, nationalization of LIC. Marine Insurance Act 1963, motor vehicle is 1988. 1999, IRDAI, Insurance Regulatory Authority of India, Development Authority. 1938 is a old law and that is a main law, broader legal framework. And here Marine Insurance is 1963, which is dealing only with the inland water and incidental land and land risk. Motor vehicle regulates that road transport vehicles related to insurance and liability. And your average clause insurance, when you are not taken the insurance fully, then according to the laws only it will be proportionately given. Life insurance is an insurable interest to be present at the time of contract, not in the future. At the time of entering into contract, there should be an insurable interest must be there in the life insurance. In fire insurance, insurable interest must be existed both at the time of commencement of policy as well as at the time of loss. In both the stages, he should have interest. Solvency margin means excess of insurer asset over the liability. Excess of insured asset over the liability, which is fixed by the regulators. Solvency margin. Insurer ability to absorb the claims and financial obligations are comes under this solvency ratio. And Exim Bank is associated with export and import. NHB, housing finance, IDBA, industrial. NABARD is rural and rural and agriculture development. DECGC, BRB, NMPL, REBIT, FTAS, RBIH, Deposit Insurance, Credit Guarantee Corporation, Bharatiya Reserve Bank Note Mudrana Private Limited, REBIT, IFTAS, RBH, all are basically RBI wholly owned subsidiaries. That's it, sir. These points are already covered. That's why I'm not doing it. Shall I begin the 8th unit, which is marketing? 4 units completed so far in 1 hour 50 minutes. Chalo. Those who belong to Telangana or Karnataka and Andhra, can you please tell your centers once? Specifically Hyderabad. So, marketing process. First, understand the customer needs and want. Later, design the value driven strategy. I am asking about the center name, sir, not the city. Design customer value driven strategy. Customer integrated marketing program. Build profitable relationships or the customer delight. Capture value from the customers. Understand the customer needs and wants. Delight customer value driven strategy. Construct the integrated marketing approach. Build a profitable relationship and capture the value from customers. Basically, these are the marketing process sequence. And customer decisions process is recognizing need, information search, evaluating alternative purchase decision, post purchase. Remaining will cover in the respective topics here. Marketing is the process of creating, communicating, delivering, and exchanging offers that have a value for customers and society. Modern marketing begins with the customer needs and with the customer satisfaction and retention and long-term value. Levitt, Theodore Levitt and Peter F. Drucker focus on core purpose of business is to customer creation, customer satisfaction, and value delivery, not just only selling. Selling concept is whatever we produce, we concentrate on selling the quantity. Marketing concept is start with the target customer and focus on satisfaction. Societal concept is focus on profit, consumer satisfaction, and long run societal welfare. Long run societal welfare. Right? And here, holistic marketing is covering Siri, societal, internal, relationship, integrated. Market driven are that are according to the customer needs and align a strategy when with a market demand. Monitor the market trends, customer needs, which are going to match with the market demand. And this will hide their. You people are seriously what I am asking, what you are answering. Okay, anyway, leave it. Blue Ocean, sorry, value driven organization focus on superior customer value, satisfaction, loyalty, and long term relationships. Next, Blue Ocean logic. Blue Ocean logic is aims at innovation and making competition irrelevant by creating uncontested marketplace. Aims at value, innovation, market competition irrelevant. So innovation and market competition is not important. They are just going to create an uncontested marketplace where there is no competition. That is Blue Ocean strategy. Customer perceived value, difference between benefit and cost. And delighted is when performance is exceeding the expectation. Relationship marketing is build a long-term relationship with the customers, suppliers, and distributors. CRM is using the customer data and interaction to improve the retention, personalization, lifetime value. And customer lifetime value is expected future point from a customer over a relationship period. And marketing myopia occurs when a firm defines business by product rather than customer needs. Marketing myopia is given by whom? Theodore Levitt. Selling product oriented and marketing customer oriented. Selling emphasizes short term transaction, marketing emphasizes long term transactions. Right, STP, segmentation, targeting, positioning. Market segmentation is heterogeneous, dividing a heterogeneous market into meaningful, relatively homogeneous customer group based on the different basis, right? Maybe region, climate, or destiny. Maybe demographic segmentation, age, gender, income, education, occupation. Psychographic are lifestyle, personality, values, and social class. Behavioral segmentation is benefits that sort, usage rate, loyalty status, readiness to use, right? So from the low measurement cost and low predictability of the choice, the segmentation we need to arrange. Target marketing is nothing but evaluate the market size, growth, and structural attractiveness, which target we should concentrate more. And positioning is creating a distinctive image in the minds of the consumer about your product or the service. Differentiation may be based on the product, that is unique selling proposition. You are unique, you are different from others. Perceptual mapping shows how customers perceive the competing brands and the key attributes. Major social influence on the consumer behavior symbols is that culture. Culture is a major social influence, and subculture is nationality, religion, and racial groups. Geographical includes within a larger culture. Social class is homogeneous division of society, homogeneous, similar nature. Reference groups are influenced based on the attitude of the people and aspiration. Opinion leaders, they form they influence the others by forming opinion. Basically, they influence the others because of their expertise. Need recognition, information search, evaluation of alternative post purchase. The sequence of consumer buying decision process. First, need recognition, search for the information, select, evaluate the alternative 1, 2, 3, and also after that purchase it, then post purchase behavior we're going to see. Richard Vaughan is given foot cone bleeding, FCB, popularized by FCB model. Here, high involvement plus thinking equal to informative category. You are involving high and also thinking too much about product to purchase. High involvement but feeling is there. Feeling means emotions, affective category. You are involving low but you are thinking much, which is habitual. Your involvement is low and feeling also there, which is satisfaction or self-satisfaction category. Next, product. Product is something offered to a market for attention, acquisition, and use, consumption to satisfy the human need. Product level, core benefit, basic product, expected product, augmented product, potential product. Core benefit, basic product, the sequence, core, basic, expected, augmented, potential. Brand is a name, term, symbol, design used, which is differentiating from the other sellers. Brand equity is adding value to your products because brand name and association. Next, packaging is protecting and identifying, promoting the handling of a product. Product mix. Mix is number of product lines. Length is nothing but total number of items in one line. And depth means under each product, what are the subcategories of product? Depth. Specialty store is a narrow product line with a deep assortment. Specialty means they are specialized only in particular, like a first cry. Category killer, very deep assortment in one category itself, one particular category. Supermarket, wide variety of food, laundry and household products. Supermarket. Discount stores competes mainly for lower price. Discount stores basically, as compared to the competitor, we are getting at a lower price. And product life cycle stage, introduction, growth, maturity, decline. Product life cycle, if you see, we offer a basic product. Here, cost plus price, skimming or penetration will be followed. Selective distribution and awareness and trial is required. Here, selling cost, promotional cost will be incurred more. More sales promotion cost will be incurred. In the growth stage, extending our service warranty, and we penetrate the market, we intensify the distribution. Mass awareness will be there. Whatever the promotion cost that you incurred, the result will come here. Reduce the heavy sales promotion because we have already done the sales promotion in the introduction. Maturity, diversify the brands and model, and here match and beat the competition. More intensive distribution, building differences among the brands. Declining is phase out the weak items, cut the price, selective phase out, and it is minimum promotion for loyal buyers. Loyal buyers. Pricing decision. Price is the amount of money which is charged for a product or service for the benefit of the product, that value we are getting. Internal pricing factors are marketing objective, marketing strategy, organizational consideration, cost. External are market demand, competition, price elasticity, customer expectation, environmental changes. All these are external pricing factors. Cost plus pricing. Remember all the pricing in one shot. Cost plus pricing. Adding fixed markup to cost to decide selling price. Value based. How much buyer perception? Like when your mother go to a shopping mall, like what seller is selling, the price is not important. What your mother is perceiving is important. She will tell that price. This product is having this much value only. I will pay this much. Will you give or not? Penetration pricing. Initially low price, later high price. Price skimming is initially high price, later low price. And peak load pricing. The price on the base of the demand. Marginal product pricing. Marginal manufacturing cost may not cover full overhead, only variable. Ramsey pricing. Charging higher markup to group with a less elastic demand, lower markup to which is having more elastic demand. Ramsey pricing is basically where you are having high margins, high profit. For them, for where it is less elastic in nature, means the percentage change in demand is lesser than the change in price. For them, you can charge a high price markup. And wherever the percentage change in demand is more as compared to the price, you follow lower markup approach. Discount. To receive the payment early, we follow discount methods or discount pricing. 2 by 10 net 30. Instead of paying in 30 days, if you pay within 10 days, I'll give 2% extra discount. Like that the meaning. Price lining. Price lining means all offer a products at a limited price levels according to the features of customer value perception. Price matching. Cost equal to selling price. Price matching. Price ceiling is maximum price fixed by the government. Price ceiling is nothing but maximum price that is fixed. Flooring is nothing but minimum price that is fixed. Pricing power. Ability to influence the firm to change the price without losing significant demand. And here barometric leadership, December 2025 question. Price changes by the firm that are publicized and generally followed by the rivals. Price which is changed by you and you already announced it. And based on that, your competitor is making changes. Dominant firm price leadership is which is largest or strongest firm which is deciding the price, like a geo leader. Medical services where customer price sensitivity is low, buyer will not think about the price. He want a product that is medical emergency. So sensitivity is low. High sensitivity means they always think about the price only to buy the product. Distribution and channels. Market channels are set of independent organizations involved in making product or service available for use. Channels. Channel must be aligned with the segmentation, targeting and positioning. 0 level, directly selling to the customer. 1 level, manufacturer, wholesaler and the retailer. 2 level, manufacturer, wholesaler, distributor, retailer, finally consumer. Channel conflict, vertical conflict or else horizontal conflict. Conflict at a same level, conflict between the different levels. Right, corporate VMS means successful stage of production and distribution under single ownership. And contractual vertical marketing system are through contracts and such as franchises. Administered are coordinating channel members through size and power of one dominant member. Retailing is selling all the products at a finally to consumer. And here direct selling is product or services to consumer without the middleman. Next, Hindustan Unilever Limited example, we know that regarding the product line categories and all. It is not a direct selling company. Direct selling company means the company which are manufacturing product and selling directly to the people. Salesforce has the highest value addition among the asked channel, and here order options due to personalized persuasion relationship building. Here increasing the value addition sequence. Internet first, people we can reach to more number of people but less sales. Retail store and distributors, value added partners and sales force. Here our impact will be more, where we do more, higher cost will be there and more effectiveness also will be there. Higher cost and more effectiveness. Guys, 2 minutes, 2 minutes. Chalo. Okay, sir. So here, internet basically, this internet retail store and distributor value added partner, here reaching to many number of people, but effectiveness will be low, cost will be also very low. But here retail distributor, all these are increasing. When you are engaging sales force like a sales representatives and all, cost salaries we need to pay, cost will be very high, but effectiveness, the sale transactions will be more here, sale transaction. And here special and category killer formats are very deep assortment, means they are going into the very specialized products in which they are going to sell it. A supermarket and discount formats are broader formats are there. Next, promotion mix. Promotion mix includes 5 things: advertising, sales promotion, personal selling, public relation, direct marketing. Right? Advertisement is a paid version which is non-personal communication, like advertisement via sponsors or else TV channels advertisement, like that. Personal selling is by a personal presentation, sales meetings will be there, sales people will be there, and sales people will engage to do the marketing. Next, sales promotion is a short-term incentive to encourage the short-term sales, that is sales promotion. Loyalty points will be given, which is one of the best example for sales promotion. Public relations also, how public are going to favorably to respond, builds a favorable publicity, corporate image, building a goodwill, all these things are comes under public relation. Next, direct marketing, which are connecting to the people directly, carefully targeted customers to obtain immediate response and cultivate the relationships. Integrated marketing communication includes all promotion tools that delivers a clear, consistent, compelling message to the audience or to the expected crowd or expected customer groups. ADA, attention, desire, interest and action. Next, push strategy. Whatever we are using the sales force or trade promotion to push whatever we produce, we are trying to sell and pushing on to the customers to sell. Pull strategy means customer is creating a demand. We use the advertising, consumer promotion to induce the customer so that consumer will create a demand. That is pull strategy. And blogs are not treated as a social network platforms. They are actually content publishing only. Blog is not a social networking platform. Facebook, Twitter, YouTube, all are social networking where we use the promotion purpose. Next is that ambush marketing. Ambush marketing obtains an event related to exposure without being official sponsor. Actually, in that particular event, he is not official sponsor, but still he is able to promote about his product. Ambush marketing. Viral marketing means within less amount of time, we are reaching it to large number of people, word of mouth, viral videos. Next, influencer marketing, we use the people who are already having a capacity to influence, like Instagram influencers and Facebook as well as YouTube, and with their credibility, with their audience to reach to a large number of people. Content marketing, we create and distribute the valuable content to attract the customers. Next, digital marketing is such as social media, email, website, online searching, mobile, analytics, all these are digital marketing. Next, 7 C's of marketing. Service marketing. Service is an act of performance by a company, one party to another party. Service which is having 4 main characteristics. 4 main characteristics, service. Service is intangible, inseparable, perishable, and also intangible, variable. Intangible, we cannot touch, and inseparable, we cannot separate the service provider from the service. With provider, with doctor only will treat the patient, we cannot separate the doctor and the service. And perishability, whenever the service is being provided, you should take the service, you cannot store it for a later use. Variability, every service provider, my teaching is different from others, other teachers are different from me, like that every service provider is having their uniqueness. Next, service benefits which are satisfying the needs of the customer. Service expectation, perceived standards, whatever you are expecting in your mind and the actual implementation, both are different. Here, intangibility means it cannot be seen. Inseparability, produce, service provider and the services cannot be divided. Variability, different from the time to time, place to place, person to person who is providing. And 7 P's of service marketing: product, price, place, promotion, people, process physical evidence. This additional piece are given by Booms and Bittner, and this 4 piece are given by John McCarthy. Low power mode. Oh my God, 2 more units are there. What you are saying, right? People are critical in service marketing because employees influence service quality and customer experience. Process is how are they providing a service. Physical evidence is that where you are going to witness the service. That is what physical evidence is. Serve equal dimensions, service quality dimension, reliability, assurance, tangible, empathy, responsiveness, 5 dimensions. Service recovery means actions taken to correct the service failure and restore the customer satisfaction. Low price sensitivity means people will not respond to the price as much to in taking these services, which are urgent, which are professional, which are differentiated. People will not think about that price. They are low sensitive means they are not responding to price much in these services, urgent as well as medical services and professional. Service benefit is satisfying the need. Service expectation is what is expected before he is taking a service. Service offer, the packages which is promised by the provider. Service level, the measurable standards of agreed or expected service. Rural marketing is creating, promoting, distributing services to rural customers in a rural market condition. And rural marketing is very large and diverse and increasingly important due to income growth and also connectivity, changing aspirations, all these things. One of the myth in rural marketing is that only low price products can sell in the rural market. Wrong. Reality is that rural customers also look at the value, quality, utility and brand and durability of the product. Rural customers are homogeneous. Wrong. Rural customers are heterogeneous, so much scattered. They are differentiated by income, education, caste, religion, occupation and access. All villages are equally populated. Wrong. Every village is having different population. You cannot say all are equal. These are all myths. Rural consumers may buy grocery, apparel, durables and agri products. And here ICT and mobile connectivity are the major drivers. Information technology and mobile connectivity are the major drivers to reach the rural market. Rural distribution challenge, scattered different population, poor infrastructure, small outlets only can work, and transportation cost will be very high. That is logistic cost will be very high. Rural communication should use the local language, symbols, demonstration, opinion leaders and rural media only can be used. And here it requires a smaller pack sizes. You cannot sell a big quantity. Long term, which is durability, utility, easy repair and value for money. Rural pricing should be affordable because it is depending upon their price sensitiveness, perceived value, income seasonability and credit availability. Rural promotion works better in demo. When you give the demo, it will work more effectively. Otherwise, it will not. And here, rural segmentation can use the land holding, occupation, income, literacy, region. All these are the variables where you can use to categorize the people in the rural market. Here, market leader has largest market share normally leads to price changes. Price changes, distribution, product innovation or the promotion. He is the leader in the entire market. He is having highest market share and he can dominate the other firm. Market challenger. Challenger is nothing but who is main competitor to the leader, who is always competing with the leader to gain market share. This is like, Jio and this is VI. And market follower is Airtel. Airtel is simply just following the market. It is not competing with anyone, whatever it is, and it is using their own market share to do the sales. Market niche focus on small specialized segment and serves it better in broader competitors. Niche means specialized people. Specialized, first cry, specialized in baby product. Niche marketing is on a small specified well-defined segment only we are concentrating. This is also called concentrated marketing. Franchising is distributing product or services through franchise using franchise's brand and business system. Direct selling removes conventional intermediaries, agent or distributors to reach customers. Market leader defense strategies, position defense, flank defense, preemptive defense, counteroffensive defense. All these are different defenses when we are competing with competitors. Flank defense is to protect the weak sides of the leader. Leader wants always try their best to protect their weak points. Preemptive defense is attract first to discourage the competitor. We want to discourage the competitor. That is why we are attacking before they are entering the market. Counter-offensive defense is respond directly to competitor attack. Whatever competitor is doing, for that we give a counter attack. Mobile defense means we dominate through innovation and diversification. Contraction defense is withdraw from weak segment and concentrate on stronger position. Withdraw from weak segment and concentrate on stronger position. And focus strategy, niche strategy, both emphasize serving and select a narrow segment effectively. Contraction defense, weaker segment and concentrate on stronger positions. Next, green marketing is basically green marketing promotes product practices which are environmental friendly or eco-friendly products which are sustainable and safe to use. Social marketing applies to a principle that influence the behavior of a social goodness. And here clause related marketing is linked the brand position with a social cause, brand promotion with a social cause. And your experiential is memorable customer experience among the brand. And your neural marketing is studies the brain psychological response of a customer to the brand. Customer engagement, emotional and behavioral involvement of the customer with a brand. And word of mouth, it is unpaid. If you're satisfied, you will inform to others, like that, word of mouth. Omni-channel marketing, where one company is selling the products via online and offline, both together, digital and physical. Retail atmospherics, it is a purchase through layout and lighting, music, signage or ambience. The people are attracting the customer with ambience or insight, whatever atmosphere. Private labels, retail owned brands sold through retail outlets. Trade up means moving to higher end goods. Trade down means shifting to discounted or private label goods. Value added partner adds customization and solution support, like a customization means according to the requirement of the customer we can make a changes. Integration beyond the simple distribution. Market research support the marketing decisions by collecting, analyzing the information about customers. Finally, we have to start with legal aspects of business. Last but one unit, last 2 units are there. It is 2 hours 30 minutes. Let's start. Next to 20 minutes will be the target for legal aspects. Right, sir? Contract Act. Valid contract requires a offer, acceptance, lawful consideration, lawful object. All the 10 essential elements of the contract has to be fulfilled by the valid contract. A void agreement is not enforceable, whereas voidable is enforceable at the option of one party only. Voidable means the party can decide whether to make it as valid or to make it as a void. Express contracts are by words written or spoken, implied or by the conduct or the circumstances. Tacit contracts are inferred from the conduct of parties, which are like by actions without expressing words. E-contracts are executed electronically. Are you watching or else not? No response from the chat. People are there, but you are watching. No response. You are keep on concentrating only on the screen. Huh? Quasi contracts are based on the doctrine of unjust enrichment. Unjust enrichment means the obligations are created by the law. Best example is finder of the lost goods. Right? Quasi, quantum merit. Quantum merit means as much is earned. As much as earned, you have to pay. How much work has been completed, that much you have to pay. That is called quantum merit. Reasonable compensation for whatever the work he has completed under the contract. At least whatever completed we have to pay. Agreement without consideration is void, except it is by natural love, affection, past voluntary service, time, bad debt. It is void. There must be a consideration. A contingent contract depending upon happening or non-happening of a collateral event, uncertain event. Wagering agreements are void because no real interest except a winning or losing. Free consent is absent when consent is caused by coercion, undue influence, fraud, misrepresentation. Section 14 free consent, 15 coercion, 16 undue influence, 17 fraud, 18 misrepresentation, 20, 21, 22 are the mistake. And coercion includes committing or threatening to commit any action which is unlawful. And widow adoption, threat connected with a cremation led to the court hold the consent was not free. Widow adoption, like when the husband was died, widowed, so he threatened to you should not be allowed for the cremation purpose. Undue influence is when one party dominates the will of the another and obtain the unfair advantage, where fiduciary relationship, presumed cases also will be there. Presumed and to be proved. One party dominates the other, patient and doctor, wife and husband, parent and child, all this. A contract may be, fraud involves deception, misrepresentation involves false representation. And contract may be discharged by performance, by breach, by mutual agreement, by operation of law, by lapse of time, by supervening impossibility. Novation means substituting a new contract in the place of old contract. Mutual discharge is novation, rescission, alteration, remission, waiver and merger. Mutual agreement means mutually the people are deciding to discharge the agreement by changing the terms and conditions which is in the agreement, or replacing a new with a old one, novation, or alteration, making some changes in the terms and condition. Remission means your cancellation of the contract, all this. Assignment is not a mode of discharge. It is not a mode of discharge of contract. If subject matter is destroyed without the fault of promisor, then performance may be become impossible, then it will be treated as discharged. Specific performance is equitable remedy for compelling performance where damages are inadequate. It is not a right of unpaid seller for goods. Specific performance. We ask for specific performance to do it. But if it is not possible, we can only claim the damages. Next, specific goods are identified, agreed upon at the time of mixing with a contract of sale. Ascertained goods are identified and agreed upon the contract of sale is formed. Unascertained goods are not specifically identified at the time of contract but must be before property is passing on to the buyer. Future goods are not available now, in future it will be available. Contingent goods are whose acquisition is depending upon contingency that may or may not happening. And existing goods are physically exist seller at the time of sale itself. Condition, sale transfer ownership immediately, agreement to sell, ownership will transfer in the future. Condition is essential to main purpose. Breach of condition may allow the rejection and damages. And warranty is a collateral to the main purpose. Here, a breach of warranty generally gives a right to claim damages only, but breach of condition leads to warranty plus replacement, both. Caveat emptor means let the buyer beware. So buyer has to be very careful before buying the product. He has to use his own skill and judgment. Caveat emptor does not protect the seller in case of fraud, misrepresentation, seller of by deception or by sample or implied fitness or merchantable quality. Seller cannot be escaping that, let the buyer beware. In all these cases, seller will be responsible and liable. Right of the unpaid seller against the goods are right of lien, right of stoppage, right of resale. And here, right of lien is right to retain the goods with him, and right to stop the goods whenever it is going in transit, and right of resale, he can sell it to some other party where he is going to get the total amount. And here, average clause in the insurance is generally applicable to an under insurance. It is basically under insurance. Whenever you are not taken sufficient insurance, then we use the average clause, which is called as per the Insurance Act. Next, negotiable instrument, a check, PBC will be there, promissory note, bill of exchange check, 456 section number. So a check is drawn always on a banker, it is payable on demand. A check does not acceptable by the drawaway banker. And promissory note, check validity, once it is drawn, it will be 3 months validity. Within 3 months, you have to encash that check. Otherwise, it is not valid. Unconditional written promise to pay a sum of money to a certain person or his order. An unconditional promise to pay is not a valid promissory note. Bill of exchange contains an unconditional order to pay and requires acceptance by the drawee. It is not a valid promissory note. A conditional promise is not, because unconditional undertaking to pay certain sum of money to a certain person or bearer of a certain person. That is the definition. And here, parties to the promissory note are maker and payee. Parties to the bill are drawer and drawee and payee. The main privilege of the holder in due course. Once he is getting a holder in due course in his hand, the instrument, then that instrument is clean, it is free from all the defects. He is getting a better title as he obtained for a consideration before the maturity and in good faith. And in due course, holder in due course means payment according to the apparent tenor. It is in a good faith without any negligence. Discharge of all parties. Discharge of parties may occur by cancellation, release or payment, and even due course also. If holder in due course have more than 48 hours for acceptance without the consent, he cannot take more than 48 hours. Generally within 48 hours, acceptance has to be given. And if it is taking more than that, contract is discharged. The negotiable instrument is discharged. Qualified acceptance without the consent of the prior parties may discharge the prior parties. Without taking approval from prior parties, you cannot give the acceptance. Delay in presenting a check within the reasonable time, usually within 3 months. Dishonor of check or for the insufficiency of the funds. Under section 138, it will be liable for the punishment. Material alteration or instrument avoids the liability unless it is consented by the parties liable. Companies Act. Section 2, subsection 85, a small company. Under section 455, dormant company. 370A, producer company. Section 2, subsection 6, associate company. And small company cannot be a holding company or cannot be a section 8 company, cannot be a body corporate having a less than 200 lakhs capital, minimum capital. Dormant company is nothing but inactive company which is not working, not actively working in the operations of the company. Associate is one which it is associated having a significant influence on the other company. Producer company is related to producer members, and agriculture are primary produce activities. Here promoter is not automatically every person associated with the formation. He is having an active role and he has to file a person which is named in the annual return as a promoter or one controlling the company affairs. The promoter is controlling the company affairs. Company formation sequence. First promotion or selection of the name. It is not promotion, it is promoter. Promoter, appointment of the promoter, later selection of the name, registration and incorporation, capital, rising and commencement of the business. This is the sequence. Certificate of incorporation will give the conclusive evidence of the company registration, and the date is treated as a corporate birth date. Whereas pre-incorporation contracts cannot be ratified by a company after incorporation because company did not exist when they were made. Pre-incorporation contracts cannot be ratified by the company after incorporation because company did not exist when they were made. And here commencement declaration form number 20A, which is filed by the directors in a prescribed format as per this form 20A regarding companies with a share capital. Memorandum of association defines all the objectives of the company, like what should be. It is an outsider agreement basically. Memorandum of association. What capital class, subscription class, registration class, liability class, all this, name class. Whereas articles of association is internal management. Section 61 permits the alteration of share capital to increase authorized capital, consolidate, convert the stock into shares, and subdivide the shares, cancel the unissued shares. All these alterations will be allowed under section 61. Cancellation of shares is not taken by any person. If cancelled shares are not taken by any person, is the alteration of share capital. It is not same as a reduction of share capital. Cancellation of shares and reduction of shares both are different. Section 64 requires filing a notice of alteration in SH7 in a prescribed time after share capital events. Prospectus invites public to subscribe, and misstatement in prospectus can create a civil and criminal penalty. Right? Doctrine of indoor management protect the outsiders dealing with a company in good faith, but not they don't know the irregularity or fail to make an inquiry. Ultra vires is when a company is acting beyond the capacity or beyond the objects of the company, which is void. Constructive notice assume that outsiders should read the public document like MOA, AOA, which is filed with ROC. That is their duty. Limited liability partnership. It is a separate legal entity having partners. Liability is very much limited. In 2008, it came into force, and 2009, 31st March onwards, it came into force. LLP is not of other partners merely being a partner, because in an LLP, partner is an agent of LLP, not the other partner. One LLP partner is a partner to LLP, agent to the LLP, but he is not an agent to the other partner. Resident Indian companies include the foreign companies, other LLP can become members in LLP. And here LLP incorporation sequence. First decide the partner and designated partner, obtain the designated partner identification number, then digital signature certificate, check the name, later LLP agreement, then he filed the electronic agreement. Another sequence is that first digital signature certificate, reserve your name, pre-incorporation document, and incorporation DIN, PAN or TAN, then draft the LLP agreement. And there are 4 schedules which usually be there. LLP 3 forms are there. Form 3 relates to LLP agreement. Form 4 is appointment of the designated partner. And LLP agreement is basically filed with a ROC within 30 days of incorporation, and it may be cash or accrual basis of accounting will be maintained. Form number 11 is annual return, which is annual return to be filed. Form number 8 is a statement of account and solvency. Form number 11 is annual return in form number 11 within 60 days from the close of financial year. And here LLP may wind up voluntarily or by the tribunal. If it is voluntarily, declaration of solvency, identify the insolvency and professional liquidators, and designated partners meeting, then partners meeting, filing with ROC and IBBA, which is Insolvency Bank Board of India, Insolvency Bankruptcy Board of India. Right, this is a liquidation sequence. Tribunal may give the order to, if any partner, minimum 2 designated partner or minimum 2 partners must be there in the partnership LLP. If it is going below 2 partners and it is same like that for a more than 6 months period, then tribunal will give the order for winding up. When LLP cannot pay debts, it is acting against the national interest, default in filing 5 years of annual return. In all these cases, tribunal will give order to close down the LLP. And schedule 1 discussing about when LLP agreement is not there, schedule 1 they have to follow. Schedule 2, how to convert a partnership form into LLP. Schedule 3, how to convert a unlisted private company or public company into LLP. That is comes under schedule 3. Schedule 4 is discussing about unlisted public company. Right. Schedule 1 is mutual rights and duties of the partner. And your partnership is related between the 2 partners who share the profit and carried on by all. This is done, sir, already. Competition Commission 2002, Competition Act 2002. It prevents the practices which are having adverse impact on the competition in India, promote the sustainable competition, even consumer protection also. Right. Provides the framework for establishment of the CCI, and it is preventing a monopoly rights, intellectual property, which is not as an objective, because intellectual property is an objective of the intellectual property rights, not the Competition Act. Section 3 deals with anti-competitive agreements, which are vertical agreements or the horizontal agreements. Section 4 deals with the abuse of dominant position. Dominant position is fine, but when you abuse the dominant position, it will be, violation under the Competition Act. Combination include the merger and acquisition. Whenever any company wants to merge, Vodafone and Idea, before merging, they have to give the notice of merging with a CCI. Then the CCI will inspect and give the permission to go further. Cartel means association of producers or seller to control the price of the production or the supply. And a dominant position becomes unlawful only when it is abused, not merely dominant position exists. Just a dominant position, nothing will happen. When you abuse the dominant position to create certain negative things in the market competition. From 1st December 2022, GST anti-profiteering complaint shifted from NAA to CCA. So now Competition Commission of India is looking after GST profiteering complaints. Right, Consumer Protection Act 2019 on 20 July 2020 it came into force, and previously this is already covered in yesterday's session. We have a 3-tier system: district level, state level, national level. So district level less than 50 lakh district level complaint, and 50 lakhs to 2 crore complaint. Then national state level more than 2 crore, national level we have to make a complaint. Next, GST, goods and services tax. We are having state GST, central GST as well as UT GST, and for interstate supply IGST. One state to another state, IGST will be applicable. Special additional duty of the custom and was a customs related levy, and it was not a state tax, it is a central tax. GST Council make amendments and exemption time to time for the GST rates. And here anti-profiteering aims to ensure the tax reduction or the input tax credit benefit passed on to consumer by price reduction. And here input tax credit can be used against the self-assessed output tax liability. And here electronic cash ledger payment sequence are: first generate the GST challan PMT 06, deposit the amount, then NEFT or RTGS you can make a payment, then amount will be credited. They'll issue you can use the PMP 07 for correcting if any issues within it, right? Basically all the GST or input tax credit you can use to claim the IGST. You can use CGST, IGST and UTGST any. And when you want to pay input tax rate CGST or IGST, SGST or IGST, UTGST or IGST, like this it will be utilized, not all three together. For IGST anything will be used. Intellectual property right. Trademark is a exclusive property right to a trademark owner. Symbol. It is a symbol or a word or a phrase or expression. Registered trademark, basically for a 10 years it will be there. It is for a 10 years. It is TM will be the one, TM trademark, that means. Asked to include invented fanciful, descriptive and generic mark. And here descriptive marks directly describe the quality or the character which may be distinctiveness for the production. Copyright is almost 60 years, so you till your death plus 60 years, and patent for 20 years, trademark for 10 years, patent for 20 years. Copyright is for death, till the death plus 60 years will be there, after death also. Copyright, literacy, artistic, musical, and geographical indication also till the 10 years. Industrial design also 10 years. Information technology. Spoofing means forging identity or the written address so that recipient will be fooled into revealing private information. Spoofing. You are just forging. Hacking offers to unauthorized access or manipulation or exploitation. And cracking commonly refers to bypassing or breaking the software. Cracking. Dumpster diving means obtaining confidential information for discarded digital material. Confidential information. Next, e-contract. Electronic contracts are created, signed and executed electronically, usually over the internet only. Digital signature authenticates electronic record based on the asymptotic cryptography and hash functions. And electronic records are digital electronic signature legally recognized subject to statutory conditions. Cyber offenses are identity theft, creating personation and using computer resources, unauthorized access to tampering computer source documents, cyber terrorism, pornography, children pornography. All these are problems only in the information technology. And right to information, which is to gives a right to give information only to the citizens of India. Right. Public information officer. Within 30 days you have to apply. Application fees is 10 rupees. Per page fee rupees is 2. And within 30 days they have to respond. If it is assistant PIO, 5 days extra. 5 days extra will be there. And where life and liberty is involved, 48 hours only. 48 hours only. And where third party involvement is there, you may extend for 10 more days. 10 more days. And first, here, information exempted under Section 8 include you cannot obtain the information from national security, strategic interest, commercial confidence, fiduciary information, personal information. All these things you cannot obtain under Section 8. And from all the investigating agencies also you cannot obtain the information because they are excluded from this law. It promotes the transparency, accountability, citizen participation, and information includes everything, but it should not be a file noting. Means serial numbers cannot be information. Next are insurance law and business insurance. Insurable interest must be legal and financial interest and the subject matter of the insurance. And life insurance, insurable interest, life insurance. For a life insurance, insurable interest must be exist at the time of taking insurance. For a fire, insurable interest must be there at the time of taking insurance as well as claiming the insurance, both. Whenever under insurance is taken, average clause will be applicable. Double insurance means same subject matter you insured from 2 or more insurers. And reinsurance means transferring the part of insurer risk to another party. And insurance contract 1938, which is regulated insurance business. Even IRDA Act also regulated your insurance business presently. Income tax. Actually, charging is not there for the tab. What to do? Last one unit is there. It will take last 20 or 15 minutes, but no charging. What to do? Almost battery is going to. Let's do how much ever possible. Charge for 5 minutes is enough. Charging for 5 minutes and continuing session is enough. No, here both cannot be connected at a time. That's the problem. Why, if I remove this one, it cannot charge. Charging, I think you know, iPad will have only one port. Okay, I'll put the charging. Let's have a 5 minutes break, and it will charge for almost 20 minutes, 10, 15 percentage. It will be sufficient to cover this unit 10, right? Be online here only. You go and come back. Yes, yes. I'll be here only. If anybody wants to interact, you can interact. In the same session, will I'll put the charging. Wait. Or else let's do this way. Why we have to restrict ourselves? Without wasting time, I can do some more alternative also. We have the alternative. I hope now it is visible. Am I correct? Can we go ahead with this? So last and final unit. So last and final unit, which is income tax. Basically, old income tax act is there and new income tax act is there. Old and new both are there. So when we comes to old and new, income tax act 2025 is there, and so far there were no questions. So in the PYQ it will not be there. We have to concentrate more on the new only. Sorry, old only. Section 80G, which is a donation related deduction. 80GGA, scientific and rural development deduction. And GGB, when you are giving a donation or contribution to political party, a company is giving donation to political party, it is GGB. Or any other person giving a donation to local authority or the political party, then we can say it is GGC. GGB for company to political party. GGC, any other person to political party donation. GGA is scientific research. And GG is rent paid, only GG, rent paid. For that you are going to get a deductions. And section 90 and 98, bilateral relief through double taxation avoidance agreement. 90 and 98, double taxation bilateral agreement. Unilateral relief is nothing but section number 91. 92 is related to arm length price, the price which is between the unrelated parties in uncontrolled condition, right? So, and here tax planning, tax avoidance, tax evasion. Tax planning is using the legal deductions, legal exemptions properly and making a reduction of tax liability. Avoidance is using the loopholes to reduce the loopholes of tax law to reduce the tax liability without directly breaking the law. You are just only bending the law. Tax evasion is illegal, either increasing the increasing the expense or decreasing the income, and it leads to illegal way. You are actually breaking the law, which is not allowed. Tax management means procedure compliance, right? And income from the head salary, employee and employer relationship will be there. The taxable point is that basic pay, allowances, perquisite, profit in lieu of salary, and retirement benefit. House property income, the tax is going to be levied on the annual value of the property. Municipal value will be deducted from the GAV calculation, which is standard deduction also 30% will be available. PGBP, business and profession related. And here when you look at the income tax basics, now there is no concept of previous year, current year and all. Assessment year, previous year is not there. Now as per the new law, only tax year is included, tax year. Assessment year means 12-month period starting from the 1st April immediately following the previous year. And previous year is nothing on in which we earn the income. Assessment year is in which we are incoming, getting assessed. Right, residential status. A resident is taxable on global income, whereas non-resident is taxable mainly on income arising from India. And residential status is determined every year separately for every assessee. Ordinary resident but not ordinary resident, and non-resident status after effect of scope of taxable income. Agricultural income is generally exempted from the taxation. It may be considered for the rate of partial integration only. And from the growing and manufacturing of tree, 40% business income, 60% agri income. If it is rubber also, 35% agri income, 65% will be non-agri income. Casual income from betting and lotteries will be taxed at a 30% rate of tax. Salary income, salary is taxable only when the employer and employee relationship exists. And advance salary also will be taxable. Provident fund type, statutory provident fund, recognized provident fund, unrecognized provident fund, public provident fund. Recognized provident fund is recognized by the Commissioner of Income Tax. SPF is recognized by the government or semi-government. Unrecognized is not recognized by the income tax. and employer contribution mainly to the interest in excess of the prohibited limit in recognized provident fund, then only it will be. Prohibited limits are nothing but 12.5 percentage maximum contribution up to, and interest will be up to 9.5 percentage. Then only it is not taxable. Otherwise, it will be taxable. Next, allowances are fixed monetary payments given to meet the specific employee expenses. And gratuity, leave encashment, commuted pensions are the retirement benefit that we are getting. Form number 16. Form number 16 is a TDS certificate issued by the employer for the salary income. Form number 16A. Now it has been changed, the new forms. Relief under section 1989. 89 is arrears of salary or advance salary. The tax burden will increase. And your income from house property. Gross annual value computation start with a compare first fair rental value and the first we have to calculate. In order to calculate the gross annual value, there are 3 steps to be involved. Higher of the fair rental value and standard rent. Then we compare, municipal rent, municipal value and fair rent, whichever is higher. That higher amount will compare with the standard rent. Then we'll get expected rent. Expected rent will be compared with the actual rent. Whichever is higher will be GAV. But whenever we are calculating the actual rent, we should remove the unrealizable rent. After calculating the actual rent, whichever is higher will be GAV, and from the GAV vacancy due to loss due to vacancy will be removed. Loss due to vacancy will be removed. Right? Reasonable expected rent is generally based on the municipal value fair renter, and actual rent received or receivable after excluding the unrealized rent before the vacancy, loss due to vacancy adjustment. After deducting unrealized rent, vacancy loss is deducted after comparing the expected and actual rent. Then you get the whichever is higher. From that you remove the vacancy loss. Right? So municipal taxes, if it is paid by the owner, only paid by the owner will be removed in the previous year. Gross annual value minus municipal tax paid, and on that remaining net annual value, we have to apply the 30% standard deduction, and 24B is having 2 deduction: interest on borrowed capital, pre-construction period interest for the 5 installment every year, a total amount of pre-construction period interest divided by 5 years, and remaining up to 2 lakh it will be allowed as reduction, interest on borrowed capital. Up to 2 houses of self-occupied it will be allowed. More than that it will be deemed to be let out property. Right? PGBP, business deductions are allowed only expenditure is incurred wholly for exclusively business or profession, and some specific deductions such as insurance premium, bonus, commission, interest on borrowed capital and bad debts allowed under section 36. Section 37, all the general deductions are allowed. Condition is that must be a revenue expenditure used for the business purpose. It must not have been covered in the previous deduction sections of PGBP. Then only it will be allowed as a deduction under this. And bad debts allowed. Bad debts are allowed as a deduction when written as irrevocable, means we cannot able to recover. Irrecoverable, we cannot recover, so which is why we can take it as a deduction. When it is recoverable, bad debts recovered, assume, it will be added to the income. Those who are spending that capital expenditure on family planning 1/5 under section 43 only, family planning expenditure, capital expenditure will be allowed as reduction 1/5, 5 installment. Suppose 5 lakh is there, 5 lakh divided by 5, 1 lakh every year deduction will be allowed. Right? Revenue expenditure on family planning is fully deductible in the year in which expenditure is incurred, and depreciation on block of assets will be allowed. And if it is partially used less than 6 months, 50% only will be allowed as a depreciation exemption. Expenses which are prohibited by law opposite to public policy, it is not allowed to as a business deduction. Capital expenditure is normally not deductible unless specific provision, like a family planning expenditure. Preliminary expense also will be amortized for the 5 years of time period, will be written off for the 5 years of time period. Tonnage tax system is optional scheme for qualifying Indian shipment companies. Shipment companies are nothing but the companies who are involved in this shipping of one place to another place, seaway. Capital gain arise on transfer of capital asset during the previous year. Capital, it is depending upon capital gain depending upon holding of a type of capital asset. Short-term capital gain, long-term capital gain are the special sections. And cost of acquisition, cost of improvement are the core components of capital gain computation. Indexed cost of acquisition will apply. Indexation cost of acquisition will apply only for long-term capital asset, not for short-term. Income from other source is a residually head of income, not covered under any 4. And interest on saving deposit, which are having deduction under 80 TTA. Senior citizen is 80 TTB. Gift, and all these are income from other sources. Next, deductions under chapter 6A. 80C for investment, common investment. 80CCH will be there, which is for when you made any contribution to Agnipath scheme. Deduction will be over. 80CCH. 80DDB, medical treatment for specified. 80E for interest on housing, interest on education loan. 80EE, interest on housing loan taken for a specified condition. 80G for donations made up to 2000 cash allowed, more than 2000 if you are doing cash donation, it is not allowed as a deduction. And 80GG, GG for rent paid deduction, GGA for scientific research donation, and GGB for company to political party donation, GGA for company to political party, GGB for any other person to political party, and 80TTA, interest on saving account deposit, normal citizen, TTB, senior citizen, up to 50,000 allowed as deduction, and 80U for individual self disability. When you are getting any amount, then it will be allowed as deduction. Premium, insurance paid for self disability or expenditure incurred for self disability. Bilateral, double taxation relief. When two countries are levying the tax, there should be a relief. Bilateral relief, section 90 and 90A, where both countries are agreed to give a relief to the taxpayer, and double taxation avoidance agreement exists. Unilateral relief, section 91, when there is no double taxation avoidance agreement between the countries. Condition 1. Condition 2, he must have a foreign income in another country, on that he paid a tax. That is second condition, and that must be related to, he must be a resident of India during the previous year. Third condition. Fourth condition, there should not be any agreement between the parties, two countries. Then only this double taxation avoidance agreement will be applicable. Right? Section number 91, unilateral relief will be given. Assessee must be a resident during the previous year. He must have been accrued income outside India during the previous year. The foreign income must have been paid a tax. And condition, total income should exceed 10 lakh. It is not a requirement under section 91. Right? 10 lakh is not a mandatory restriction. It is only PYQ point, but it is not. And DTA may operate through exemption method or tax credit method, but India is following tax exemption method, and relief will be computed as per the, first we have to calculate the total income from Indian plus non-Indian income, foreign income, then calculate the tax on that, then calculate the average rate of tax, the tax in step 2 divided by income in step 1, we will get an average rate. How much rate you paid in the foreign country, the rate of tax, compare both, whichever is lower, that lower into foreign income, the double taxed income will be the relief, And transfer pricing is nothing but the price at which the multinational companies, a transaction which is happening between the two associated enterprises, international transaction is happening between two associated enterprises, where they are having a capacity to influence and divert the profit from the high taxed country to low taxed country. So further, to avoid all those practices, we have an arm length price concept, which is a transfer pricing methods. Arm length price is a price which is under section 92F. It is a price which is agreed between the unrelated party in uncontrolled condition, where there is no relation exists. control condition normally exists with associated enterprise, where we can influence the transaction. Uncontrolled condition, when unrelated parties, we cannot influence the transactions freely. Transfer pricing aims to curb the practices which are manipulating the shifting of profit from one country to another. And associated enterprise international transaction are having certain methods to stop this practice. So those methods, arm length price calculation methods are CUP method, comparable uncontrollable price method, resale price method, transaction net margin method, cost plus method, profit based methods are the 5 methods which are there in the arm length price. Which is not a method means other than this 5 will be a arm length price, not a methods. Tax planning is a legal arrangement, tax evasion, tax avoidance already we have seen. I am not going again into the same details. Surcharge is additional tax which is paid on the tax only, calculated on the tax amount, not on the total income. When the total income exceeds 50 lakh rupees, 10% will be the surcharge. More than 50 lakh but less than 2 crore, it will be 10% surcharge. Up to 1 crore. 1 crore to 2 crore, it will be 15%. More than that, it will be 25%. And here rebate is a reducing tax liability. Now present is that if you are a resident individual having a less than or equal to 12 lakh of income, then you can get a rebate up to 60,000 or the income tax that you calculated, whichever is lower. And we are having a standard deduction 75,000 under the head salary. And TDS is a tax deducted source by payer before making a specified payment. TCS is collection of it. And here sale of a motor vehicle exceeding 10 lakh. Motor vehicle exceeding 10 lakh. For them, 1% will be the TCS, collection at source. Advance tax liability will be applicable only when the TDS limits are crossing, or advance tax is applicable when your tax liability is more than 10,000 in a 4 installment. First 15%, second 25%, remaining 30. Second is 30%, third one is 75%, fourth one is 100%. Like that, 4 installment we have to pay advance tax. But those are following the presumptive income, they have to pay advance tax in the last installment, that is 15th March, 100% at a time they need to pay. They don't have any chance. And interest under 234A(b)(c) for default in or delay in filing of the advance tax obligation, you have to pay the penalty or the interest. And here updated return will be filed within not 24 months, it is 48 months now. Now it is changed. ITR 1 is for Sahaj, who are the resident individual for a salary person, 1 house property and agriculture income less than 5,000. 50 lakhs will be the total income. ITR 1 cannot be utilized by resident, not ordinary resident or NRI or director of a company or who are having a foreign assets. ITR 1 cannot be utilized by those who are exceeding 50 lakhs. And form number 26 AS, which is an annual information statement, you can able to obtain. And e-filing sequence is that register, then login, then download the form, prepare the return according to that form, e-file, after that verification in the ITR 5, either Aadhaar based OTP or else physically by sending via courier to Bengaluru head office. PAN is permanent account number, it is commonly user ID for income tax portal. If your income is exceeding beyond the exemption limit, you have to obtain the PAN number. And ITR is a verification may be done electronically in the ITR 5. And ITR U is applicable for updated return within 48 months to modify anything. And tax management includes maintaining a documents of form number 16, TDS certificate, investment proofs. Corporate tax planning, which is minimizing the tax burden, choosing the lawful alternative before the transactions are executed. Here MAT, minimum alternative tax, applicable only for corporate companies, 115 JB is applicable. And AMT means alternative minimum tax for non-corporate taxpayers, those who are claiming certain deduction, for them reduce the tax rate. MAT is 15% will be the tax rate, AMT is 18.5% will be the tax rate, which is basically a alternative tax mechanism for corporate and non-corporate assets. That's the end of the single liner revision. Almost how much time it is? 3 hours. I just only tried my best to revise all the UGC Net Commerce PYQ points from the unit 1 to unit 10. Unit 1 to 3 we covered in part 1, 4 to 10 we covered in part 2, and now in the today's afternoon examination, I am pretty sure some concepts you are going to witness in the upcoming examination. Kindly ensure after completing your examination, do not forget to inform me. My phone number is there with you, my WhatsApp number is there with you. You can inform me after the class, and we'll meet after the class. All the pro members of Siddhi batch, now, like around 11 o'clock, we'll meet for a 5 minutes only, just a 5 minutes briefing I wish to give. So kindly attend that one. Right? Thank you so much. All the very best. Have the confidence. Remember the last minute tips which I given for solving the question paper. Solve the RC in the beginning, 3 RCs of both paper 2 RCs and paper 1 RC, and how to deal with a problematic question. I hope you must have watched that previous video. So please ensure that has to be implemented properly in the examination. Don't get panic for difficult question. Don't get excited for easy questions, and have the clarity of reading while reading the question. Correctly concentrate on the wording of the question, correct, incorrect. Do not lose your patience at any case in the examination form. Right? Thank you so much. Have a great day. All the very best. Whatever the 3 hours of concentration is going to bring your JRF, so that have that concentration properly. Thank you so much.